CFA Society NG.org, a force for good.
Okay. Good morning, everyone.
Morning.
Video welcome to the CFA Society Nigeria ESG Roundtable. Thank you for signing in from wherever you have signed in across the globe. And it promises to be a very insightful and productive session that we are going to have today. The array of speakers that we have assembled at CFA Society Nigeria. As it were, going on right now in Glasgow is the 26th Conference of Parties, COP26 event that has world leaders addressing issues around climate change and the environment. And that underscores the importance that the environment has for us all, and the kind of investment decisions that are taken have impact on environment and on the people and on society at large. And this is an auspicious moment for the society to organize this event. There are experts on the speaker list that are going to break down the seemingly nebulous ESG term, which is even somewhat esoteric. And they are going to break it down in different sessions, introducing different perspectives from international perspectives, international investors' perspective, as well as from local perspective. At this point, I don't want to take so much of your time. I would want to invite the president of CFA Society Nigeria to give an opening speech and remark. Ibukun Oyedeji, P3, as we fondly call her in CFA Society circles. Ibukun, Madam President.
Thank you very much, Yemi, for the introduction. Good morning, everyone. On behalf of the Board of Governors of CFA Society Nigeria, I'd like to welcome you to our inaugural edition of our CFA Environmental, Social, and Governance Roundtable. Over the years, the CFA Institute has built a track record of stimulating dialogue around new beneficial industry practice and promoting a culture of continuous improvement for the global investment industry. In Nigeria, the CFA Society Nigeria has consistently raised the professional standard for investment management practitioners nationwide. We have achieved this through creating value for our members and fruitfully engaging with stakeholders in the financial industry ecosystem. In continuation of our mandate of promoting global best practices for the investment industry, we have organized this roundtable to serve as a stimulus to advocate and promote awareness in Nigeria and Africa as a whole for the incorporation of environmental, social, and governance factors in business decisions and product development. The theme of the roundtable, Unlocking Value Through ESG Investing, implies that there's an untapped opportunity that exists in business beyond profitability. Our clarion call today to the investment management industry is to put measures in place to ensure that products and services contribute to the sustainable development of our environment, employee working conditions, labor rights, diversity discussions become at the forefront, while transparency and openness provide long-term benefits for shareholders and all stakeholders are widely embraced. ESG factors has become increasingly important to institutional investors, and there's a rising need for us investment professionals, regulators, and other stakeholders to build the capacity in ESG-focused investing, which will remain relevant. This roundtable serves as a foundation for building the sustained efforts in developing our local capacity in ESG investing. The CFA Institute, led by Mark Franklin, the President and CEO, has demonstrated the commitment of the Institute in promoting and supporting ESG agenda in Africa. And CFA Institute, through the principle of responsible investing, has created a best practice report and region-specific reports that are focused in our region, which is EMEA in specific, to help investors understand how they can better integrate ESG factors into their equity, corporate bonds, and even the sovereign debt portfolio. During this event, we'll hear more about the CFA Institute's initiatives around this area. We'll also be educated about the CFA certificate, the ESG certificate in ESG Investing, which is owned and administered by the CFA Institute. It provides an opportunity to accelerate the progress and demonstrate the purpose through responsible investing. It is aimed at equipping the practitioners and other stakeholders within our community with the right tools to navigate this evolving terrain. Today, I have the honor of welcoming our keynote speaker, Mr. Okey Enelamah, the former Minister of Trade, Industries and Investment, and currently the chairman and co-founder of Africa Capital Alliance, into this conference. I also have the opportunity and privilege to welcome Mr. Lamido Yuguda, the Director General of the Securities and Exchange Commission in Nigeria, and Mrs. Aisha Ahmed, the Deputy Governor, Financial System Stability of the Central Bank of Nigeria, who will be the special guest speakers. It may interest you to know that they all have one thing in common. They are all CFA charter holders. And will also permit me as well to welcome other distinguished panelists who will be speaking in today's conference. We have a robust lineup of speakers, both international and local speakers, who will share their experience and their perspective on ESG consideration in investing across emerging markets, and highlight where our capital market currently stands on sustainable investments. They will also attempt to chart a course of the journey ahead for us and deliberate on opportunities and challenges of ESG-focused investing in Nigeria. I wish to thank each of these panelists again for joining on honoring our invitation to speak at this roundtable. And to every one of us attending this conference, I want to say a very big thank you for dialing in today. I am certain that you will find this discourse very beneficial to you. I implore you to connect with the CFA Society Nigeria on our various initiatives and charge you to obtain the CFA Institute Certificate of ESG Investing in order to continue to build our financial market to global standards. Thank you. Now, I would like to call on the keynote speaker, Mr. Okey Enelamah, CFA, to now begin his speech. Thank you.
Thank you very much. I hope you can all hear me.
Loud and clear.
Loud and clear. Excellent. Thank you very much. And I see somebody is sharing the screen, which is great. I was going to share it myself, but if you want to share it, that's fine as well. Is it better to share it from there?
You may share it.
Okay. So.
Okay, you can go ahead and share, sir, if that's more convenient.
Well, if you take yours down, then I'll try. Yes, thank you. Yes. So again, let me just say how grateful I am to be joining us today. I hope you can all hear me. Your Excellencies, President of the CFA Society, CFA charter holders, distinguished ladies and gentlemen, I hope you can all hear me. It's a real privilege to be asked to speak to us today on this very important theme and subject, particularly at such an auspicious time, as was pointed out earlier, when the whole globe is focused on just the issue of the environment and trying to make sure we deal with issues that relate to sustainability. Today, I'm going to be speaking to us on the theme of the importance of ESG considerations in private equity investment in Nigeria and beyond, and I would say even beyond Nigeria to Africa and the rest of the world. And to get us started, I'll cover four broad themes, give a brief introduction, and then talk about the overview of ESG landscape as we see it, and then the role of environmental, social, and governance factors in private equity, and environmental, social, and governance factors as a value driver in investing. Let me start with a very quick overview of Capital Alliance. African Capital Alliance, some of us know the firm. We've been around for over 20 years, pioneered private equity investing, at least in a professional sense, both here in Nigeria and West Africa, and we're increasingly active in the rest of Africa with offices in at least 2 other countries. And I want to also use this opportunity to say that, like, we've had real hands-on experience dealing with ESG factors in over, in the investments we've made, which are probably over 60 in number. So I'll be speaking from my experience. Just let's start by, dealing with ESG, at least as it relates to private equity. And from a private equity perspective, ESG is the consideration of environmental, social, and governance aspects alongside financial factors in investment decisions, that this would then hopefully lead to increased and better investments for the long term that are sustainable. So the key is sustainability and impact. The concept of ESG is something that has become mission critical. And because when ESG factors are not properly addressed, they can lead to very negative outcomes, or they can lead to mission critical risks around the environmental, social, and governance aspects. And I've listed here some of those areas. Under environment, of course, climate change is the big theme of COP26. Waste management, use of water and limited resources, energy, biodiversity, social factors around labor and occupational health, diversity and inclusion, employee welfare, human rights, and so on. Governance factors around sustainability, business ethics, anti-bribery and corruption, board governance and oversight, and business continuity and succession planning. All these are important areas that ESG would typically address when it's brought in, nice and early. Now, talking about the impact of ESG in private equity, or ESG from a private equity perspective, what we are seeing is that we've moved increasingly from compliance to value creation. In other words, there is a lot more emphasis now on, using ESG as a way to add value to what we're doing, as opposed to just to meet mere compliance basic standards. Just to give you some quotes to support this, I think it was a group called Mark Sustainability Partners that said the consideration of ESG factors in private equity has significantly moved from beyond a perfunctory gesture to satisfy limited partners to something that is really a value driver. In 2021, PwC noted that businesses all over the world are acknowledging ESG as a driver of value creation and urgently developing a more proactive way of looking at ESG, a more proactive ESG mindset. The graph I have there shows some of the key ESG factors, where they were in 2013 versus 2021. You see that all the things have trended up. From valuation of ESG performance to integration through the investment cycle to investment decisions. I mean, every factor, we've seen an upward movement, where ESG has become, of high consideration compared to where it was just 7 years ago. So this is really a big deal, what we're talking about today. And I hope we'll leave this meeting with a renewed commitment, to impact and sustainability and ESG. The next slide I have talks about how you go about, establishing environmental, social, and governance considerations as a value driver. In other words, how do you, what is best practice? How does one do it that would lead to better outcomes? And there are several factors to look at. First, that ESG, has become increasingly a critical component of what fund managers do. And you find that even the limited partners, so-called limited partners, who are the investors, the institutional investors, would typically look at ESG factors in considering who will manage the assets for them. And this is now a well-established, way things happen. And we have found that better ESG practices, enhance not just financial performance, but the overall value of the business. So this is no longer an either or, it's not coming at a cost to financial this thing. Frequently, if you do it well, it can actually add value. And integrating ESG principles could also enhance a company's reputational value. And crucially, particularly given the times we're in, this COVID environment we're in, companies with good ESG performance are more resilient in downside situations. And that's what we're finding. We have given some examples here of companies we've invested in and some of the savings we've made, whether it's in terms of actual money or improving health and safety factors or backward integration, which is something that is very topical in Nigeria today. And even in the oil and gas area where there's a lot of concern around fossil fuels, we are finding that some of our investee or portfolio companies have been involved in the Nigerian gas master plan in a way that is trying to move away from, just things that are degrading to the environment to more environmentally friendly ways of investing. Let me talk a bit more about, this ESG and how it works in practice, just how it works in practice in terms of private equity investing, which is really the part I'm covering today. What we have found is that integrating the environmental, social, and governance management throughout the investment cycle is the key. In other words, it's not an afterthought, but it's something you build in. As you know, the investment cycle starts from deal sourcing to diligence to managing the investment to exit. And what we've laid out on this chart is just the various things you have to do, from assessing the risk at the beginning, making sure that the company in question has an ESG framework it's working with, and then using our own ESG policy, to make sure that if there are any factors that are identified nice and early, and then going on to due diligence, where you make sure there's a plan coming out, of the diligence in terms of what we call the environmental and social action plan, which is a plan you would then implement once the investment has been made. And that, if it's done properly, will lead to successful outcomes, which will show up both at exit and even subsequent to exit. We tend to prepare a report to show how the investment has gone. So this is just making the point about integration. Of course, it's not a one size fits all. The point to note here is that you will have to tailor the ESG program to the particular investment, but this is just a framework that works for every investment. What you have on this next slide is, just dealing with bringing back this home. I mean, this was covered by the president, by our president P3, Mrs. Ibuku Oyedeji, when she was presenting just how important ESG has become. But it's particularly important for us, given the social factors we're dealing with in Nigeria. Look at all these issues on that side. Those are the same issues we're dealing with as a country: high unemployment rate, insecurity, inadequate infrastructure, poor governance, social inequality, climate change, environmental pollution, human rights, and the list goes on. The key is that when we are investing as a private equity firm, or even as an industry, when we take these factors into account, we believe that we can be part of the solution, that ESG can become part of the solution. It can lead to more job creation and economic development and financial inclusion and good governance and better climate resilience and so on, and employee wellness, if we are proactive in dealing with ESG factors. So it becomes an important tool in solving the needs of our society. So it's not a nice to have, it's actually essential. And I hope that will come through as others speak to us today. Let me deal with at least one case study, just to bring some of these points home, because I just wanted to set the tone by dealing with what's happening in our industry, giving them that I don't want to speak to us for too long. This is dealing with one of the businesses that African Capital Alliance invests in, called Ashwa Holdings. They are the owners of Daraju. Daraju is a household personal care products manufacturer in Nigeria and some other countries in West Africa. And what you will find is that right from the beginning, when we invested in them, we got involved in dealing with health and safety initiatives and other ESG considerations that have paid off quite well in this investment. The company is ISO 9001 certified, and it's made all kinds of savings, whether it's in terms of using solar power to generate alternative energy or renewable energy, to sort of some of the things they've done to reduce use of fossil fuels, to backward integration that reduce import dependence, to water treatment, The company has been a real good case study of how you can leverage ESG in running a business, particularly a manufacturing business where there's a lot of operational considerations. So with that as a case study, I would like to begin to conclude by just dealing with a summary slide that that covers just some of the impact we're seeing in our own portfolio across board. And this is my last slide really. And here, what we're trying to do is to show that we haven't yet arrived. But if I look at where we were versus where we are today, whether it's from point of view of promoting gender inclusiveness or inclusion, or to creating employment, to strengthening and protecting investee workforce, to financial inclusion, to resource efficiency. In all those areas, we've made progress. We're not there yet. I mean, our target will be to, get to a situation where we have 50% of the representation of our boards be women, where our portfolio companies have, as many as many women as we have men and so on. But I think the important thing is to just keep moving in the right direction and getting better at this and realizing that this is not just a nice to have, like I said, this is something that actually creates value when it's done right. And I hope this gives you a flavor for what is happening in the industry, in private equity industry, when it comes to environmental, social, and governance factors and impact. One of the last points I should make is that we are finding that the subject of impact, investing is very topical now. In fact, most of the major investors who are investing into Africa, are even more concerned about impact investing than just pure play commercial returns. So I think the thing we're talking about today is not only topical, but it's just the way to go. And thank you for listening. And I would like to stop sharing my slides now and hand over to the next speaker. Thank you very much.
Thank you very much, Mr. Enelamah, for the insightful presentation. I'd like to welcome the Director General of Securities and Exchange Commission of Nigeria, Mr. Lamido Yuguda, CFA, to come and give his presentation. Thank you.
Thank you.
President of the CFA Society of Nigeria, members of the Board of Governors of the CFA Society of Nigeria, distinguished colleagues in the CFA Society of Nigeria, fellow speakers, participants, distinguished ladies and gentlemen, good morning. I'm very delighted to be invited to speak at this ESG Roundtable organized by the CFA Society of Nigeria. ESG considerations as tools for value creation are becoming increasingly more important in economic and financial discourse and in investment decision-making. Thus, as the regulator of the arm of the financial sector that provides long-term funding for development, we are delighted to be part of this gathering of professionals to gauge the level of performance so far and deliberate on how to achieve other set goals regarding ESG. This is an area we are very much interested in and have made efforts to introduce necessary regulations, facilitate growth in the sector, and encourage best practice. With the enhanced status, the enhanced focus on ESG considerations, much effort is now geared towards preservation of biodiversity, climate change mitigation and adaptation, inclusiveness, reduced inequality, human capital and communities development, among others. Given the important position of the financial sector in the economy, one can understand why these issues are accorded high priority in the sector and why the sector has begun to consider sustainability in its practices. Sustainable finance has become a global brand as the world stands strongly together to promote the transition to a low carbon, more resource efficient economy and to build a financial system that spurs sustainable growth across nations. As we are all aware, finance has had enormous influence on sustainability, with players in the financial sector acting as catalysts for redefining the natural and business environments. They help support the transition from exploiting nature to restoring and maximizing nature's valued gifts. Investing in sustainable instruments, therefore, has far-reaching benefits, further justifying why ESG advocacy and practices are gaining more popularity. Globally, investors and issuers are embracing the concept of sustainable investing and environment-friendly projects. This has led to a surge in sustainable investment over the years, driven largely by investors' desire for a cleaner, healthier, and more equitable future. The Global Sustainable Investment Alliance, GSIA, in its 2020 Global Sustainable Investment Review, released earlier this year, put the size of sustainable investment at more than $35 trillion US, accounting for 36% of total assets under management in 5 of the world's biggest markets. That's the US, Europe, Australasia, Japan, and Canada. Bloomberg Intelligence also projected that ESG assets may hit 53 trillion by 2025, a third of global AUM. Therefore, the African continent, and particularly Nigeria, with abundant natural and human resources, is in a good position to embrace sustainable finance principles and attract investment for the region's much needed growth and development. Looking at what has been done on sustainable principles in the Nigerian capital market, one can identify a number of regulatory frameworks guiding the adoption of these principles. These include codes of corporate governance released by sector regulators, as well as guidelines on sustainable investment practices. For instance, the Code of Corporate Governance for Public Companies in Nigeria, issued in 2011 by the Securities and Exchange Commission, contains in Part D provisions for addressing sustainability issues in the relationship between companies and their stakeholders. The provisions cover areas such as employee welfare, health and safety, workplace diversity and equality, environmental impact, and community development. Similar provisions are contained in Part E of the National Code of Corporate Governance 2018, issued by the Financial Reporting Council. Furthermore, the SEC Nigeria released the rules on green bonds in December 2018 to support the issuance of debt instruments with positive impact on the environment. The rules define a green bond as any type of debt instrument, the process of which will be exclusively applied to finance or refinance, in part or in full, new and or existing projects with environmental impact. So far, the federal government has issued in 2017 and 2019 with combined value of 25.7 billion naira. This is to finance projects in the 2017 budget for afforestation, renewable energy, and provision of clean energy to support education, as well as to support green projects as identified by the Interministerial Committee on Climate Change and approved in the 2018 Appropriation Act. We have also recorded some interest from corporate issuers. For instance, Access Bank PLC issued a 15 billion naira green bond in 2019 to finance and refinance eligible green assets and projects, such as water flood defense, solar energy generation facilities, and agriculture. North-South Power also issued 2 green bonds in 2019 and 2021 through their SPV, with a total value of 14.83 billion to finance some solar power projects. In addition, our registered exchanges are introducing sustainability principles and practices to companies trading on their platforms. Specifically, the NGX released its sustainability disclosure guidelines in early 2019, showing a step-by-step approach on integrating sustainability in organizations, as well as indicators to be considered in annual corporate disclosure. Listed companies are expected to integrate these sustainability principles into their activities and periodically report on their progress to their stakeholders. The FMDQ exchange is equally supporting issuers of green bonds on its platform and has, with support from the United Nations Environment Program, UNEP, set up the Financial Center for Sustainability, Lagos Initiative, to champion and drive green and sustainable initiatives. There is also a sector-wide adoption of sustainable investment principles under the Financial Services Regulation Coordinating Committee, FSRCC. The FSRCC has developed the Nigerian Sustainable Finance Principles with the objectives to A, stimulate a resilient, competitive and sustainable financial services sector that galvanizes economic development and improves the quality of life for all. B, improve corporate governance practices to ensure that the participants in the financial services sector operate in a transparent and sustainable manner. C, nurture an environment that facilitates job creation and diversity, women empowerment, access to affordable financial services by the economically active poor, and development of our people. And D, contribute to efforts aimed at reducing global warming and other environmental footprints. In implementing these principles, regulated entities are expected to establish the standards for their entities and be committed to them, establish sustainable processes and operations, and ensure proper reporting. For the journey ahead in driving sustainable principles for the Nigerian capital market, it is important that we continue the adoption of global best practices to improve our existing sustainability guidelines and principles, while encouraging the market and other stakeholders to embrace behavior and conduct that engender sustainable economic activity. As noted earlier, green bonds are gaining acceptance in Nigeria, but one can see that the number and value issued so far is quite low. Consequently, we need to facilitate the issuance of green and sustainable instruments in our market. The issuances will go a long way to assist in financing solar energy and other environmentally friendly infrastructure. Beyond the federal government and corporate issuers, subnationals, that is the states, can take advantage of the growing appetite to issue bonds to finance relevant environmentally friendly projects, especially those that are revenue and with reasonable social impact. Companies will also need to continuously disclose relevant information on their adoption of ESG principles. Such information will be critical to the investing public to make informed decisions about available investment choices and guide their asset allocation. Another important step in the journey of promoting sustainable investment principles is the development of robust sustainability and indices to track companies' ESG performance. This will further assist ESG-conscious investors in making their investment choices. It will also simplify for investors and other stakeholders the process of analyzing information disclosed by issuers on sustainable finance. Given the global interest in ESG and the quantum of finance available to corporates and countries adopting the relevant principles, Nigerian issuers, governments and corporates, regulators, exchanges, and others need to collaborate more to develop and issue necessary instruments to attract additional foreign capital into the country. As securities regulators, our core mandate is protection by maintaining fair, efficient, and transparent markets and reducing systemic risk. We believe this role can further be harnessed through sustainable finance, and we will continue to strongly support the adoption of ESG principles and collaborate with relevant stakeholders to drive sustainable finance initiatives. I'm really pleased and encouraged by the interest shown in ESG by the CFA Society Nigeria. I'm also glad to inform you that the Commission will be willing to collaborate further with the CFA Society on ESG and other relevant issues. With the quality of the membership of the society and the resources available to it, I am confident that such collaboration will result in positive outcomes for the Nigerian capital market and for the economy as a whole. I have no doubt that collectively we will chart a common course for sustainable finance in Nigeria that will be beneficial to the economy and to our citizens. Once again, I'm honored by your invitation and I thank everyone for listening. God bless you all.
Thank you very much, Mr. Lamido Yuguda, the Director General of Securities and Exchange Commission of Nigeria. I'm especially gladdened to hear the DG say SEC will be willing to collaborate with CFA Society Nigeria on ESG matters. At this point, I believe we are headed to the first plenary discussion, the roundtable discussion, where the panelists will be discussing ESG considerations in investing across emerging markets, the perspective of international investors. For this panel, we have distinguished panelists like Enelamah, Vice President, Business Development, AFC Capital Partners, Guy Alexander, ESGI Director, CDC Group PLC. Aaron Kalshika, CFA CAI, is a member of the advisory board of Cambridge Sustainable Investment Partners. Manish Shakdwipi is the head of climate change ESG research at MSCI. And moderating this panel is our own Tokunbo Ishmael, CFA, co-founder and managing partner, Alethe Capital. I believe I can hand over to Tokunbo.
Good morning, everybody, and thank you, Yemi, for that introduction. Thank you for inviting me to moderate this panel on this ESG Roundtable. For me, it's particularly gratifying because when we set out to, as trustees, to start the society over a decade ago, and I was trumpeting ESG and impact investing, I seemed like a strange species to my colleagues. And so having my colleagues, and in particular the keynote speaker, open with the mandate of ESG on a purely ESG roundtable, it's a great day for, I believe, the society and investment in Nigeria. As Yemi mentioned, I am co-founder and managing director of Alethe Capital, which is a pioneer impact investing private equity firm based out of Nigeria with the mandate to drive inclusive strategies, financial inclusion, energy inclusion, and most recently, the largest fund on the continent, intentionally seeking to invest in businesses that impact women and are led by female founders. So as I said, this is a great day for me. I have my panelists who are here today, and we have a great roundup of panelists, and indeed you're going to learn a lot and enjoy this discussion because they come with a variety of experiences. I believe you've received all their bios, so I'm not going to have us spend precious time reading through those bios. But I have Manish here. I can't see him on my screen yet. Yes, there we are. So we have Manish Shakdwipi. We have Guy Alexander, and I'm going to pass on to each of our panelists. We have Aaron here as well, and Ellie. So I'm going to pass to each of you to just give us a quick sentence on who you are and where you focus within this ESG spectrum. So let me start with you, Manish, and then we'll move on to Guy, and from there on. Yeah, Manish.
Thanks, Tokunbo. Yeah, I'm Manish, based out of Mumbai. I'm part of ESG and climate research team at MSCI. MSCI ESG Research is a ESG data and research provider, and our products are used by global institutional investors such as pension funds, insurance companies, sovereign wealth funds, asset manager, etc. So yeah, looking forward to a very interesting discussion here.
Thank you, Guy.
Hi, good morning, everyone.
Guy, by the way.
Good morning, everyone. Pleasure to be here, and thank you for the CFA Nigeria for inviting us. Just by way of background, my name is Guy Alexander, and I'm Director of Environmental Social Governance at CDC. development finance institution owned by the British government investing in African and South Asian markets. And we obviously have a big presence both in the private equity funds industry in Nigeria, but also direct equity and debt exposures. And pleasure to be here.
Thank you, Guy. Aaron? I can't see you on my screen, but I know you're supposed to be here.
So good morning, everyone. So my name is Aaron Kelshiker. I have a background in investing in global markets. I was formerly part of the team that set up Allianz Global Investors. I was a portfolio manager, a country CIO there. My most recent role, I've been head of asset allocation portfolio strategy for Standard Chartered Bank. And what I'm currently doing is working on sustainable finance solutions with asset managers and asset owners. So together with Cambridge Sustainable Investment Partners, which draws its expertise from the University of Cambridge. And that is me, and it's a pleasure to be here.
Thank you, Aaron. And finally, last but definitely not the least, Ellie. Do we have Ellie here? Yemi, is Ellie online yet? I don't think we have it. So, but we'll start. So, Manish, let me come to you to start. And I'd like to ask your help in helping us frame what we mean by ESG investing, because over the years, certainly since Alethea Capital started, the definition has broadened and picked up lots of champions along the way. And so I'd like you to give us the context of what we're talking about and provide a sense of the size and growth trends for this sector.
Sure. So if we look at the literature in general, like say even Google on Google, like you will see like a lot of terms used for ESG investing. So it's like responsible investing, impact investing, screening, negative screening, impact investing, ESG integration, and so on. So yeah, it's like there are a lot of terminologies, but these all are like sort of ESG investing. And broadly, we can classify ESG investing into three categories. So the first is values-based investing. It's like the oldest form of ESG investing. It started, as far as institutional investing is concerned, it started around the 1980s with socially responsible investing. And here the objective is to actually not invest in companies that can lead to reputational risk for investors. So it could be like companies involved in certain negative, say, operational practices, human rights, or say some operations, or which can be like saying are not like, or say lead to like environmental issues, etc. Or it could be like another dimension, which is like the product itself. So the product which are not aligned with the investors' values. So it could be like the weapons, tobacco, etc. So this is like the first form of sort of ESG investing. And the second is impact investing. It's like the opposite of what I just talked about. So here investors select companies which can lead to positive environmental or social impact. So it could be again access to finance or access to healthcare, education, renewable energy, clean technologies, and so on. So we have recently heard a lot about sustainable development goals, sustainable development goals, green bonds, and so on. So this is like the second form. Here, investor will pick the companies which actually fit on those criteria and invest. And the third is the risk-driven, or I would say the ESG integration. So here, this set of investors see ESG factors as a financially relevant factor, and they feel that if they incorporate ESG factors into their investment assessment process, they could come up with the better selections. So I'll just give one example. Say if there is a company, water intensive company operating in a water scarce area or the water is stressed area, correct? It could lead to like the operational risk for that company. At times when water is not available, the plant may not operate, and so on. So it's like a direct financially relevant risk for that company. So these investors will look at like the ESG factors which could be like relevant for or economically relevant for companies. Now, if we look at the entire these three dimensions, especially in the developed market, where I'm talking about North America, Europe, Japan, Australia, etc. These actually accounts for almost 30% or 35% of the current assets. So when we talk about the total AUM, which is around, say, 98 trillion. I'm looking at the data, which is 2020 data, 98 trillion, and ESG investing, or the responsible investing, accounts for 36% of that, which is around 35 trillion, and it's growing between like 2 to 5, 6% every year.
So we're seeing significant growth. Certainly,
yep.
To hear today that it's at 30% of 36% of global markets. That's
yep. In the emerging markets, it's still like very low base, correct? So 1 or 2%. So again, we can see how much emerging markets can go, and it just shows the growth potential of ESG investing in these markets.
Yes, indeed. I was going to say 36% globally is impressive. And I was going to say that in emerging markets, it's still really the tip of the iceberg. So Aaron, why don't I come to you, because Manish has spoken of the growth of ESG globally and specific growing interest in emerging markets, albeit still quite tiny. With this interest, what are the challenges you see for investors looking to implement ESG strategies within emerging markets? And perhaps you can also tell us about solutions that you propose to smoothen out such challenges.
Yeah, no, absolutely. So following on from Manish's very complete description of what's happening with respect to sustainable investing, it's probably worth adding a couple of additional comments with respect to that. So some of the key drivers that we've had over recent years that have really catalyzed investing into responsible investing, sustainable investing, have been regulatory changes. So in Europe, we've had the EU taxonomy, which is basically a way of coming up with a common language that people can try and use, companies can use to classify green activities. And we know that greenwashing, so obviously corporations, asset managers, asset owners, sort of promoting their investing as being sustainable and responsible, has come under a lot of fire. So the EU originally came up with the EU taxonomy as a common language or a common framework to be able to classify green activities. In addition to that, they've also come up with something called the Sustainable Finance Disclosure Requirements, so SFDR. And this is also a really strong catalyst for investors to look towards how green their investments are. So potentially some of the key aspects of that is, it's a spectrum of how the objectives are for green investments. So for instance, they talk about Article 8 and Article 9. And Article 8 is basically a sort of a fund that has characteristics that promote ESG within its investment mandate. And Article 9 funds are funds which are defined as dark green and basically have a very clear, sustainable and ESG objective. And so those two criterion have been paramount in asset managers' approaches to how they are approaching responsible and sustainable investing by virtue of this classification. You take it back in the value chain, and then that also has an implication for asset owners as well. So asset owners are also very aware of some of the regulatory changes taking place. Many of them are actually being mandated to sort of disclose their own metrics with respect to how green their investments are. And we have something called the task force, the TCFD, so the Task Force on Climate-Related Financial Disclosures, which is basically an initiative that was set up by Mike Bloomberg, who was the chair, a task force which he led to implement what is essentially a framework for climate reporting standards. And this framework has actually been adopted internationally. So there are countries now that have adopted it. It's been announced at COP that obviously it's gone into UK law. They're subject to parliamentary approval, and companies that are listed will be reporting climate disclosures using TCFD. I sort of paint the picture because it also gives the framework or the background for how asset owners, asset managers are currently thinking about investing into both emerging markets, but also investing responsibly and sustainably. And the challenges are that with the way that the current metrics are styled, there is a big focus on carbon, on obviously the climate and decarbonizing portfolios. And that also has huge implications with respect to where some of those assets currently reside. Now, obviously, fossil fuels is a big debate, which will continue to take place. But the reality is that when people are looking towards social and responsible investing, they are looking at these metrics, these frameworks that they're helping to guide their respective investments.
Thanks for that. And actually, I'm going to, and that tells with what you said, the technicalities of what you said and the discussions that are still ongoing. And indeed, we're all hearing about what's happening at COP26. Clearly, people are still trying to figure it out. However, in our markets, in Nigeria, on the continent, we've had to grapple with this for much longer. And so maybe, Guy, I can come to you to bring it home for us to on the ground experience with respect to what growth opportunity, much has been said about the growth opportunities, but really what are the key standards and metrics that our investors, we have common investors, particularly the development finance institutions, what are they looking for and seen as international best practice, given that this has been at the heart of a lot of the work that we do in emerging markets?
Yeah, thanks, Tokunbo. I think you've touched on the key question. It's a very good, and Aaron's given a very good lead-in for me, actually, in the sense that clearly where the EU is at is to, with the Task Force for Climate-Related Financial Disclosures and the taxonomy, is to avoid greenwashing when it comes to sort of ESG strategies. But where you need to start to avoid greenwashing is to make sure that there's a consistent risk management framework in place, and that's what the development finance institutions have emphasised over the past decade, 2 decades. I mean, it links back a little bit to what Manish said at the beginning, that where the development finance institutions came from was originally with a do no harm approach. So we were looking to avoid certain sectors where we felt the activities were not those that were conducive to sustainable development, and then make sure that as a minimum businesses operated in line with local law and sort of international labour standards. But what had increasingly come into sort of the mind of development finance investors has been sort of internationally aligned good international industry practices, such as the IFC performance standards, which are basically the bedrock of development finance. And I would say, going back to how Okey started today, they really do straddle the sort of the cusp of being a risk management framework, but also a really value creation framework as well, because ultimately these are driving businesses in the direction of making them competitive in international markets, attracting new kinds of customers. For those of you who don't know what IFC performance standards are, they're essentially an improvements over time approach. We recognise many businesses as international investors will not be best in class on day one, but it's a framework that investors can use to sort of essentially avoid risk where risks can be identified, then sort of reduce, mitigate, and then potentially offset as over time. And it's based on principles of proportionality and materiality, as you might expect. And what that leads to is, as an investor, you need to think not just of the do good approach, but also how sort of some of the risk metrics link into that. So to give you an example of a metric, if you're thinking about occupational health and safety, for instance, you'll be thinking about incidents and lost time events. And clearly the purpose of an investor is to both measure those and to use that measurement to reduce them over time. So it's thinking about the materiality and proportionality to make sure that as an investor, you are front foot across all manner of risk, without which you can't claim to be ESG lens, to take it full circle.
Yeah, no, thank you for that. And it's quite interesting because you talk about that journey, just as Manish mentioned at the beginning, about going from do no harm to a progression. And certainly my firm, Alethea, we are more about being proactive about driving particular inclusion. So access to essential services, gender inclusion, diversity, etc. So being quite proactive. And so it's interesting to see that progression. And Aaron, I'd like to bring you in here because there has been that focus a lot, especially as we've mentioned with COP26 on the environmental and in the past on the governance. And I know you've done some work more on the S side, which lends itself to this proactivity beyond do no harm. Can you tell us what investors beyond development finance institutions are focused on for such opportunities in emerging markets?
Yeah, no, absolutely. So, and I think that probably the work that that you're referring to is that, so I also volunteer with CFA UK's pension expert panel, and we've done a consultation for the UK government with respect to the social opportunities and risks for institutional investors in emerging markets. And so I guess bringing it full circle, I think with respect to the social opportunities and risks, a lot of it almost comes back to the metrics that are available. So where we were with climate 5 years ago, where people were trying to work out, how do I map a carbon footprint? How do I try and determine what my what my sort of weighted average carbon exposure is, be it on an enterprise value basis and or on a revenues basis. People are still very aware of what is happening in the social space, the idea that we need to have very, very good practices, both internal practices on the part of companies. So obviously labor practices, inclusion and diversity, and obviously many, many things that you've mentioned, and also very strong, robust external engagement and practices. So for instance, the supply chain, as well as consumer protection and things of that sort. We also have a lot of social trends which are currently taking place as well. So digital disruption, and obviously the digital divide is something that's very prominent. The idea that we want to have we want society to be bettered for the developments that we've got, and not necessarily divided for the kinds of developments that we're seeing within various arenas. And obviously technology has been a clear area of debate there. I think talking about the social opportunities and risks, it's really a function of almost trying to find the metrics. So we're at that point where we're looking for the metrics. To give more background, the EU, following on from the EU green taxonomy, have also put forward a draft for the social taxonomy. So that's currently being put out for consultation, and people are sharing their thoughts on that. You have organizations like the World Benchmarking Alliance, which are kind of coming up with benchmark to try and gauge how successful companies are with respect to social metrics, and that goes across the board from labor practices across different areas of importance across the social spectrum. I think what's probably, and bringing it all together, possibly from bringing in some of the points from Guy and also from Manish, is in terms of how the investments are currently taking place in Africa. I think we've seen almost, and especially within the social space, we've seen that historically development finance has played a larger role, and we're seeing that almost as African economies have been developing, obviously becoming more successful, that amount of access of development finance has actually become lower. And so there's almost been a pivot from foundations and other organizations, international organizations and the like, and also domestic foundations, to move towards impact investing, as an example. So impact investing is becoming very prevalent. There are platforms that are being set up. Probably worth sharing that AVPA, the African Venture Philanthropy Alliance, have done some very, very strong work in there, where they did, they've canvassed, across the continent. So, I think that's the current pivot that's taking place, and the idea is that blended finance, catalytic capital, and this marrying of private markets finance and public institutions is going to be quite key with developing this going forward.
Absolutely. And in fact, if anybody ever thought that this was not an important area in development, I'm reminded of the recent IPO of Deliveroo, where social factors played a role in what people now term as one of the worst IPOs, because they had such a bad rap on their social side. And that's why for us, as well as we think about our investing, it really is about intentionality and being proactive about these factors. I see that Ellie has joined us. Welcome to the platform. And indeed, that's a good segue into asking you about your work within private markets, where regulations and enforcement may be less effective than in the public markets, as we just mentioned, and even the force of hand of large institutional investors. Can you tell us about how companies in your universe are responding to the growth of ESG investing?
Yeah, many thanks again. I think that's a very good question. As you know, at AFC, we are basically a multilateral finance institution, and we focus primarily on infrastructure. Over the past 15 years, we've invested heavily into many sectors like power, transport, heavy industries, telcos, and natural resources. So these are actually sectors that have a heavy footprint in the economies of Africa. And we started off the journey, as some of you have mentioned, very early. It's not an option for ESG investors. I think ESG has become mainstream. To give you just an example, as part of our investment process is an integral part. We consider ESG right from origination. It's for each project we have to do environmental and social risk assessment, as per IFC performance standards. So basically we've come a long way. So I will actually argue that in private markets, though not regulated, there is a higher chance to actually have a higher impact within the ESG space. And I will explain why. So what we've seen over the past decade with the DFIs, they've changed the landscape. Today, you will not see basically a GP, a private equity fund, a serious one, operating on the continent without ESG in their strategy. So basically, the large investors basically made it a standard, and those LPs also impose the same standards on their companies, who are now starting to embrace it as an opportunity. So apart from that, I will say that what you will see in happening in emerging markets like Africa is that we are going beyond ESG. As a matter of fact, within AFC, for instance, we are looking at opportunities to integrate climate risk assessment in our projects, basically looking at vulnerabilities to climate risk from each infrastructure asset class, mapping those to make them more resilient. And beyond that, looking at environmental and social factors. To combine that, maybe to finish, we have, in our responsible investment framework, quite a unique approach. When we invest in companies, we come in with the goal to add value. We take board seats. We partner with equity partners that think along. And this enables us to actually mainstream that within our portfolio companies. And to end, just a classic example, even in sectors like industrial park, as the continent looks to industrialize, but in a greener path, we've initiated very good initiatives like our Rights platform, where we started off in Gabon with a sustainable forestry industrial platform. We partnered with a well-known sponsor. And today, this is the first carbon neutral industrial park on the continent. So it is really happening. So I think as opposed to listed markets, where usually if you are not in high conviction strategies, you don't have a dominant say on the board. In private markets, we have this opportunity to influence and to change that. And this is a paradigm shift that we are seeing right now, still, let's say, at the DFI level and more established players, but we are moving that along the way.
Indeed. And
I'd just like to add into
managers,
that. Sorry, if I may, just and from the allocator's perspective, globally we're seeing financial repression. So interest rates are, negative and or virtually zero. So people are looking towards alternative assets to invest into, and private markets, private debt, private equity are very, very high on people's agenda. And those allocations will be increasing just because we've got this extended period of financial repression taking place. I think it's a very, very relevant point.
No, absolutely, and that intentionality is quite key. And for us, for example, we have toolkits for gender lens, for financial inclusion, and it starts from the minute we start speaking to people. However, what I'm seeing in the market is a little bit of greenwashing, for example, especially as we talk about the environmental. So Manish, perhaps you can talk to us about what you're seeing in the market and how investors can mitigate for greenwashing. And other kinds of washing, pink washing, social washing, any washing, all colors of the spectrum.
I think the generic framework remains the same. So when we talk about investing in green bonds, so in addition to what issuers are saying, investor actually look at, or in addition to like what issuers are saying, they can look at additional parameters. So one is of course the use of proceeds itself. So Arun has already talked about the common language that EU has come up, EU taxonomy. Before EU taxonomy, like there was even not no clarity like what is green and what is not. So there is like now there is one standard. So the first step for investor is to actually assess use of proceeds, whether it will be invested in eligible projects or not, or the projects which are aligned with the EU taxonomy or any other like the standard taxonomy. The second factor they can look at is like whether it's like business as usual project or additional projects. So again, not like some investor may prefer like only additional projects, but some may invest like in both. So it's like it's the second criteria. The third is I think very important is ring fencing of the proceeds. So if you are saying that issuer is saying that if saying that the proceeds will be used for green projects, then the proceeds actually should be ring fenced. This is like another, it becomes another criteria. And ring fencing then means that it will be invested only in the selected projects and not for like the general purpose of the company or the general purpose of the issuer or any other projects. Okay. And finally, like one more, I think criteria on the ongoing basis is the annual reporting requirements and reporting on the like how proceeds were used, or what were the impact of like those projects and so on. Yeah. And and we have seen like several cases where the project when like or the bond when issued was like a green, but after say 1 or 2 years of the investment, it became black. It doesn't remain green, correct? So then investor may know, can take out that bond from their portfolio. Yeah. And you touch on an important point around reporting and the consistency and being able to disclose. And Guy, I know that you spend a lot of time putting together your ESG reports, and perhaps you can tell us how some of the investors that you interact with are looking at the constraints to delivering good ESG performance, and therefore those reports that remain green or the right color of the rainbow.
Thanks. I mean, on reporting itself, I mean, I think that as investors, we have to be cautious to say that the aim of investing is solely reporting and disclosure. That is that we really do need to focus on a management systems approach that goes all the way back to selection. And I think that's where the biggest risk of greenwashing, to be honest, that the selection happens and then the sort of the consistency of the risk management frameworks are not built out afterwards. And then reporting is completely the other end of the management system. It's sort of based on the improvements that the investor has needed to work with the company to make. And so I wouldn't overemphasize reporting, except for the fact, of course, that that is a key component of the framework, such as TCFD Absolutely. And others. I mean, other constraints that I would just emphasize to pick up on your question on constraints. I think a lot of it comes to this concept of knowledge transfer, actually, between investors and other actors in the ecosystem, in order to make sure that the shared vision of what ESG improvement actually looks like within portfolio companies. And so that happens at the level of the investment process within the private investors, to the sort of the points that Okey was making, but it also happened within portfolio companies themselves. A genuine ESG approach does not necessarily mean that you simply empower an individual to be responsible for ESG and deliver ESG friendly outcomes. It actually needs integration across management within a portfolio company, and so it's as much people as it is process and systems. And perhaps, and I just wanted to divert the conversation briefly, just to touch on one other constraint, given that everyone has been talking about the importance of social alongside green on this conversation, which is just to sort of highlight the temporary disruption that COVID has caused to sort of social within portfolio companies, and sort of exacerbating vulnerability, income fragility, changes to working conditions, and sort of in some ways also exacerbating the digital divide. And when you think about responsible investing, applying ESG frameworks, you still need to have that very much front and center alongside the sort of the international taxonomies that are coming online to make sure there isn't greenwashing.
Absolutely. Very important. And I would add to that the cultural mindset, the consciousness has to be pervading through the whole company, and the fund manager and the portfolio company down to the value chain of the businesses, to ensure that we are going over these constraints and smoothing out on these challenges. Thank you for that. I'm going to stay with you, actually, Guy, and ask you to open up your crystal ball and tell us what you think are emerging areas linked to ESG that companies and investors will prioritize in coming months and years.
I mean, listen, I mean, there are lots, and it really does depend who you are as an investor. I mean, I could hardly claim, for instance, that climate is an emerging issue. Everyone is focused on it at COP, but I think in terms of the granularity and the governance considerations that climate and TCFD, sort of a TCFD lens, will apply to investors, that is something that every investor, whether they are a small SME on the African continent or BlackRock, are also going to be grappling with mutually and trying to find a solution to how that sort of impacts their asset allocation. The climate would be one. I think there is a lot more coming online in the social space, as Arun has already highlighted. But I think that you're going to be seeing sort of a human rights lens, a sort of a contextual risk lens to investment, getting ever more granular over the course of the next 5-10 years, and that's a function of, if you like, of how investors have been burnt, probably more in the social sphere in the last 5 years and even on the environmental side. So I think you'll see both new frameworks, but also increased expectations to be much more granular in sort of how social and labour due diligence is conducted. I think probably on the environmental side, other areas that I just highlight would be sort of themes including just transition, natural capital, circular economy, concepts that seem at times a little bit nebulous to an investor perhaps right now, but I think again they're going to be themes that are going to be very granular and will impact on sort of the intentionality in terms of asset selection in the course of the next 5 to 10 years. So it's not necessarily you have to have a position on them now, but if you're not thinking about them, I think you could find yourself behind the curve quite quickly.
Yeah, and actually that brings me to you, Aaron, and Guy has already brought up the name BlackRock, and keeping on the theme of the crystal ball, there are murmurings that influential investors like BlackRock and even exchanges are imposing ESG standards on listed companies. So really driving perhaps on the rules and regulations behind that, similar perhaps to what we saw with Sarbanes-Oxley with governance back in the day. How do you see this inhibiting or facilitating the development of ESG investing and practices within these listed companies?
So, I mean, clearly there is a dramatic implication, and we've seen that, already come to pass. And the example is that, we have things like TCFD that has become mandatory reporting. So it's gone into law, regulation, and companies are given, some companies are already reporting TCFD reports, producing TCFD reports, and others will be mandated to produce them by a certain date. And in the UK, I think they're pushing to have that date around, as early as 2022. And so even thinking about aspects like climate, and again, obviously there are then implications then for a company to take that back and look at their value chain and understand their own corporate activity to see how they stack up. And ultimately, there is the impact to the cost of capital. So the idea that you follow that whole value chain through, asset owners are almost being regulated, but also there's a kind of a push and a pull. So the pull is from their stakeholders, the push is from the regulator, and what the focus is on is when we talk about TCFD is very much on climate. And so with that, that's going through the whole value chain. So be it the asset owners, the institutional investors, pension funds and the like, obviously the conversations are then taking place with BlackRock and their other managers. And then that conversation is then, filtering through to the companies who now realize that it is a very, very key priority, because they not only will be having to report their own climate, disclosures, using TCFD for the regulatory purposes that they have to produce, but also in terms of how the investors view it. So I think there is quite it's a very clear impact on the entire value chain. I think what's useful to see is that, we've made progress on climate and on TCFD. And there are some landmark reports that have been really catalyst to that. So the Intergovernmental Panel on Climate Change, which is an international effort of leading scientists globally, have produced very, very strong, compelling evidence. The most recent report, which they produced, literally came out a few weeks ago, where they've clearly highlighted the dangers of not being able to keep global temperature rises below 2 degrees, or 1.5 degrees. So it's depending on the factors that may come to pass. So that's been highlighted as a very, very real concern. And as Guy and others have mentioned, there are other things also on the radar. So, for instance, in the UK, again, probably a rather pivotal piece of work was published this year, which was 2 years in the making, which is called the Das-Gupta Review. And that is focused on biodiversity. And that was, put together by, Sapatha Das-Gupta, who's an esteemed Cambridge University professor, who was mandated by the UK Chancellor a couple of years ago, actually, to put this report together. And it kind of challenges the concepts of economics, traditional economic thinking that we've been using. And within that construct, we've not actually really accounted for natural capital and all the depletion of natural capital, or what impact that is, unintended consequences. And so this, very, very well-regarded piece of work, fantastic piece of work, kind of highlights how we need to start incorporating those into what ultimately become our expectations of a return. That's one thing that's really key. And the other thing that's also worth sharing is this concept of universal ownership. So universal ownership was championed, by many people and parties, but it probably got a lot of support from the government of Japan's pension fund, where this idea of universal ownership is that investors, should look beyond their own beneficiaries and also look towards society, because of this circularity. There is always an impact with respect to societal impacts and how that filters back through to ultimately the impact of beneficiaries and their well-being and their livelihoods. So this idea of universal ownership is quite a key one. And then from there, other things are developed as well. So we talk about, obviously, stewardship principles, the idea that we are, as investors, we are stewards of the monies that we manage, and ultimately we want to try and promote the best activities for that. And this idea of universal ownership ties in very much with that kind of thinking. And even if we talk about things like stewardship, the UN Principles of Responsible Investing have sort of highlighted this area last year for their global leaders group. The focus is very much on climate. I think this year that they've released, an excellent piece of work with respect to active ownership and principles for stewardship, and the idea that it's not about engaging, it's about outcomes. So really the focus on delivering outcomes, and also this idea of collaborative action as well. So together, a single investor may have some weight with an invested entity, but as a collective, we have a far larger voice, and hence so this idea of collaborative voting, collaborative engagement is also something that's been highly promoted.
Thank you for that, Aaron. And shifting gears slightly, but staying with the climate side of things there, Manish, with COP27 coming to Africa next year, can you comment on the opportunities and perhaps challenges specific to the environmental or climate-related financing that you expect to emerge over the next 12 months, specifically within the continent, and some of the murmurings around the fact that the emerging markets still need more dirty fuels, significantly more to develop than they're going to be allowed to do or asked to do, given the reduction targets for net zero?
So in general, when we talk about COP26, one word that we are hearing more often is the net zero. And then it would basically lead to demand for carbon offsets. So let me explain this net zero first. Net zero means that the total carbon emissions emitted by a company or say country will be equal to the total carbon emission absorbed by the forest or say carbon capture devices, which are like the machines. So basically, you first reduce your emissions, and then of course there is a technical limitation. There are sectors where you cannot go to zero, like steel, cement, etc. So those emissions still will be there, but you will absorb those emissions through either a nature-based solution, which is like the forest, or say technical solutions, which is carbon capture devices. So this is the concept. So world, there will be still emissions, but it will be net zero. And now at the company level, you see that many companies are also going for net zero pledges. So like net zero by 2030, net zero by 2040, and so on. Like many companies are putting those pledges. Even like at the company level, they can try first, like they will reduce their emissions, but there is certain limitation. They cannot go, they can do it in their own operation, but they cannot reduce emission in their supply chain. They do not have like control over that. So what they can do is they can go and purchase the offsets. And offsets is like a project which has happened elsewhere and has reduced the emission or they removed the emission. So so it's like a big opportunity for, in general, for the emerging markets, continent as well. So this is the, I think, the first. The second is that there is an increased interest globally on the assessing the temperature level of companies. So what is the like current emission level of company, and what is the projected emission level, and whether it's like aligned with 1.5 degree scenario, 2 degree scenario, or 4 degree scenario. So now there are tools where you can say understand the implied temperature rating or the rise of a company, and in coming days, like we'll see more investor action around understanding like their company's implied temperature rise, and yeah, making investment decision, or at least engaging companies on those parameters. And
perhaps I can,
yeah,
sorry, go on. Go on.
And the third is I think we will see the continued momentum in green bonds after COP26. It has been like growing very fast, and we'll see that remain.
An acceleration. Perhaps
Yes.
I can bring that question to you as well, Eli. Again, with COP27 coming to Africa, what's your crystal ball saying about climate-related financing trends over the next 12 months as we prepare to host this auspicious event?
Yeah, thanks. I think COP27 will be very big for Africa, and I will explain why. So you know the global context of climate change. Currently, Africa contributes just about 4%, less than 4% of global emissions. And even our largest emitters of Africa has already agreed to curb emissions. Second, we are the most vulnerable continent to climate change. We are already feeling the effects, not just in terms of the population suffering from the effect in the agricultural sector, but even our infrastructure is suffering the effects of climate change. I believe that after COP26, what is likely to happen for COP27 is that the promise of the $100 billion per annum, which was agreed during the Paris Agreement, will be basically at the heart of the topic. Now, for African economies, it also opens up huge opportunities. I think Guy already mentioned the topic of the green, of a just transition. Look at the power sector, for instance, in Africa. There is a huge opportunity to leapfrog and to massively invest in renewables. Actually, Africa has close to 2 trillion of investment opportunities in this shift to net zero, to align to the Paris Agreement. But the key challenge is that we are the continent that has the most difficulty in tapping global capital markets. So how do we reconcile the two? The risk perceptions are still overly, I will say, are overblown. I mean, this is actually actual data. So we have to reconcile the dots on how we mobilize the trillions for Africa. And I've touched upon the power sector, where obviously we have close to 600 million people that still are waiting to have access to clean energy. But beyond that, you look at Africa, that still accounts for just 2% of the global supply chains, and the continent wants to industrialize. So how do we do that in a green way, knowing that we are a low emitter? Can we shift 100% to renewables? At the same time, we have heavy, let's say, resources in gas that can actually even power the whole continent. So those questions of just energy transitions will be probably also at the core of the topic. And then you also have adaptation that will be a huge topic for COP27. So how do we scale up adaptation? So out of the 2 trillion required for climate finance in Africa, actually only about 10% is required for adaptation, but this is still a lot, about $230 billion. But only less than probably 5% of global funding is going to adaptation. So I think these are some of the key topics that will be at the core. And we actually at AFC, we are already thinking ahead of how we even frame our strategies around that. And the same applies to the other MDBs. So, scaling our game in the climate transition, but also scaling our game in terms of how we build our infrastructure. Ports, for instance, with sea level rise, there are huge impacts. So how do we build infrastructure that is climate resilient? Our roads, you have climate stresses like increasing temperatures. How do we build the right, roads with the right drainage systems to have those infrastructure last? Because the reality is that the reason why, climate risk disclosure is increasing in importance is because if we don't build our infrastructure in a way that is climate resilient, we are just exposing ourselves to catastrophic losses. So what we are doing, just to finish, is ahead of COP27, I think there will be huge debates as to how we fund the gap, the climate finance gap for Africa and emerging markets, number one. Number two, how do we address the question of energy transition, bearing in mind that these are actually urgent needs that need to be addressed now. So looking not just about clean, but the social impact, the gender impact, all this will be on the table. And on the adaptation side, both, whether in agriculture, in infrastructure, all this will be at the table. So we see COP27 actually as a very big play for emerging markets, given that it will be hosted in Africa. And we are already thinking to position ourselves on that.
Absolutely. Those are very good points, and thank you for those. So we're coming to the end of the panel. And so to end, I will come round each of you for the one thing that you want us to anchor our thoughts on as we leave this panel today. So I'm going to start with you, Guy. What's that one thing?
Been put on the spot then. Okay. I mean, the one thing I would say is that, as you've heard from all the panelists today, there's an increasing interest and expectation to pursue an ESG impact strategy, however you choose to define that as an investor. I would just encourage everyone listening today to not forget the management systems and risk-based approaches that is the bedrock of delivering compelling and practical impact. And so think people, processes, reporting, stakeholder engagement, and that's ultimately, over the course of an investment life cycle, the best way of avoiding greenwashing.
Thank you. Manish?
So one point that came out of your later end of discussion is the just transition, correct? We talked about net zero, just transition, and universal ownership as well when Arun mentioned about that. And the just transition is a principle which is could be very well aligned with the universal ownership. So say if there is a company, correct, and which is say in fossil fuel business, and if it is a laggard from the climate risk perspective, correct? But it will lead to the social risk, and that, for example, the employees do not have job, for example, and then there is a circularity, and it will have impact on other companies in the portfolios as well. So I think universal ownership or universal owners actually will look at the just transition in more detail and with more seriousness. Yeah.
Thank you. Aaron?
And I mean, I guess continuing that train of thought, we talked about the just transition, the idea that as we transition to a low carbon economy, that people should not be left behind, and the reskilling and those opportunities can come to pass, and universal ownership, that we're all impacted as a society by the investments that we make. And I just want to take that one step further and talk about something which is very much on the radar, but probably doesn't receive as much airtime as obviously some of the other aspects. And this idea that with the transition to a low carbon economy, with the climate crisis, women are potentially impacted far more greatly than their male counterparts. So if you think about the impacts of the pandemic, the idea that women were impacted far more than their male counterparts during the pandemic because of the industries in which they were, they have a greater proportion of representation, hospitality and services. If you think about Africa within the context, and BCG have done some very good work here, they talk about the idea that women will be more negatively impacted, and they sort of talk about other aspects of the idea that they're far more prevalent into some of the industries there. They make mention of agriculture as an example. The idea that potentially they'll have, with the climate crisis and the implications of that they will have less time to focus on things like education and health, and potentially also their longevity, their lifespan may be impacted because of injuries and other sort of chronic diseases that will be related to impacts from the climate crisis. So this idea of gender lens investing, I think is really, really key. And we need to kind of really have moving towards a sort of truly inclusive and diverse society. We need to have that equal representation and that equal voice. And I'd say that's really key and very, very paramount.
Thank you. Eli?
Yeah, so just in terms of last word, I think one thing that is clear is that ESG and climate risk integration will very likely, as we are seeing currently, drive capital flows in the future. And this presents an opportunity not just for asset owners, but also for companies to proactively adjust to this trend. And there is also obviously the question about impact. You hear a lot about impact, and I think one trend that we would like to see more is to have institutional investors really mean impact. That means that you have to push the frontiers, you have to come to emerging markets, you have to be able to push boundaries, and there are huge opportunities both for mitigation and adaptation. So I think it's actually a global trend that emerging markets can benefit from, and we need to position ourselves to be able to absorb those capital flows, as this is basically the trend that has started, that is here to stay, and that will actually accelerate in the future.
Thank you. And I will just end by saying, for me, being intentional about ESG strategies will lead to superiority in our decision making, which will enable us to be the better stewards, not just of the capital, but enable us to proffer these solutions that we've spoken about, these superior solutions that are not just great for the climate, but are great for our people on the continent as we seek to be more inclusive. And there's no better way to be inclusive to ensure that all assets are properly utilized. And for me, I always say the women are the ones that are overlooked and underutilized assets of our economies. And in being inclusive and using them, Africa indeed will reach its full potential. So I really want to say thank you to my panelists. It's been a great discussion. I hope everybody has learned loads. I've certainly enjoyed the engaging discussion, and I look forward to seeing my panelists in person somewhere in the near future. Thank you, everybody. Over to you, Yemi.
If you've made a decision to aim for a long-term and successful finance career, taking the Chartered Financial Analyst CFA exam and studying the curriculum is an excellent way to ensure you have a strong knowledge base and top-notch skills. Are you ready to take the bold step to invest in yourself? CFA Society Nigeria is at your disposal, promoting the highest standards of investment practice in Nigeria. As an affiliate of CFA Institute, CFA Society Nigeria seeks to promote the highest standards of investment practice in Nigeria and to provide a vibrant community in which its members and other key players in the investment industry can interact and grow. When you have the CFA charter, you're globally recognized. Take advantage today by writing the CFA exam and joining us at CFA Society Nigeria. For more information, visit us at cfasocietyn.org. CFA Society Nigeria, making finance a force for good.
Wow, thank you very much to Kumbo and the panel that did very good justice to the topic ESG considerations in investing across emerging markets, the perspective of international investors. There were quite a number of questions in the chat box from our participants that will probably be filled in on later, but we'll need to move on right now in the program. We'll have on next as our guest speaker, the Deputy Governor of Central Bank, Mrs. Aisha Ahmad, is also a CFA charter holder, to deliver a speech. Okay, she's on. Welcome.
Thank you, Yemi. And it's been an amazing morning. I've learned so much. The last panel, really interesting, and the speakers that came before me. Thanks for the opportunity to speak today. I'm always very glad to be on the CFA Society Nigeria platform. I'm very proud of the work that the society is doing to promote the institute, to candidates, charter holders, and just the broader investment community, particularly through these policy roundtables and the quarterly leadership series. So I say well done to the team, led by my sister, Ibukun, and the rest of you on all the work you're doing. The theme, as other speakers have mentioned, is actually very relevant given the ongoing COP26 conference. We may be aware that the president committed to net zero carbon emissions for Nigeria by 2060. And we are going to achieve this through some incremental investments in renewable energy sources, such as hydro dams, solar, wind, and some of these we've started to do. The last word from the previous conversation around how Africa is going to fund all of this and around how we are going to achieve a just transition, I think is very, very relevant for all stakeholders. So I've been asked to speak on ESG considerations in bank lending, the role of the CBN in promoting sustainable and impact investing. As is typical of me, I have taken the liberty to modify my topic to something else, but still aligns. So I want to speak on integrating ESG considerations, a financial policy perspective. I think this topic is more relevant to the broad theme that we've selected for today, and I think it will complement what the other speakers that have spoken today have spoken about. So by way of background, I think not until the mid-2010s did investors start to, pay attention to ESG related data, carbon footprint, labor policies, things like that. Today, that data is increasingly being available, and investors are using these non-financial factors in their consideration of investment analysis and decision making. And so whilst, this is not mandatory reporting, we started to see a shift to what is called integrated reporting, where companies are choosing and electing to provide this information as a means to differentiate themselves and make themselves more attractive to investors. We have firms such as Risk Insights, who have now launched the first AI-driven ESG rating model in Africa. I believe it was already also launched in Nigeria. And I think initiatives like this will help, companies familiarize themselves with the key metrics and positions themselves to report in this respect. So clearly, ESG related risk opportunities is becoming a real topical issue. And so institutions are focusing not just on driving stakeholder value. I think a couple of weeks ago, I spoke at a WIM-based corporate governance platform where they were talking about impact versus shareholder value. Now companies are looking at trade practices, people welfare, making sure they have fair governance practices to ensure that they are preserving their long-term sustainability. And COVID itself, the COVID-19 pandemic, with all of its ramifications for women, for vulnerable groups, exacerbating income and other inequalities, challenging financial inclusion, is also intensifying this focus. Now, for central banks, policymakers such as myself, we are also looking at this situation because we are grappling with these issues and their potential impact on our key mandates, particularly of price stability and financial stability. For instance, there's been consideration of discussing ESG risk factors as they pertain to the financial industry, because we know that environmental catastrophe has an impact, potential to cause large losses, the fact that social risks can exacerbate financial exclusion, the fact that some of the failures we've had in the past have been directly due to governance failures. Also, climate change has been a key focus, given that these extreme weather events can impact price stability because of food prices, etc. So you would permit me to focus a little on environmental risk issues as a critical part of the broader ESG framework we're discussing today. Acute climate events such as wildfires, hurricanes, chronic climate change impacts such as shifting crop production, which we have seen in Nigeria, and reducing coastal boundaries, displaced residents, and we know what that displacement can do for social cohesion, security, etc. These two key events can negatively impact the ability of financial infrastructure, such as the payment system, access to the credit system, and of course, direct access to the payment system when you have such a disruption. I think it's worthy of note that the key leverage in payment systems and the advantages of having a robust payment system came strongly during COVID-19, as we saw a predominant increase in the use of digital financial services. And that speaks to the point that one of the panelists made around making sure that we do have some fairness when it comes to the digital access. Now, I think it's important to mention that emerging markets and developing economies will be disproportionately impacted by this, clearly given their geography, their population, and the limited fiscal sort of space in order to manage some of these impacts, and that is where the funding of all of this becomes very critical. So for central banks, for policymakers, and also the financial sector, we have a key role to play in mitigation, in transition, in building resilience for the impact of climate change. And central banks, in response, are pursuing inclusive green finance, which is just a way of linking green finance to financial inclusion to improve access and to improve resilience. And the specific ways in which central banks are integrating some of these conversations, we've seen the Basel Committee created a task force to look at climate-related financial risk. The US Federal Reserve joined the Network for Green Financial System. Nigeria is in its process of joining that group as well. The Bank of England, is including financial environmental sustainability into monetary policy. European Central Bank, the Bank of France, and all of these other policymakers are doing all of this. For Nigeria specifically, of course, the impact of climate change is similar to what I have discussed earlier, and is actually significant. We've seen how this is created the migration has created some supply bottlenecks And of course, this has affected food prices, and that has affected the price stability mandate. What the CBN has been doing is to focus on, insurance, on de-risking the agricultural sector, on risk sharing through organizations like NERSL, and also providing low interest loans for smallholder farmers, etc. But speaking broadly, around some of the initiatives that are launched from a broader ESG perspective. We issued the Nigerian Sustainable Banking Principles in 2012, and those principles are currently under review to make climate-related issues more prominent, and also to consider other sectors for focus. Right now, I think the principles focus on oil and gas and agricultural sector, and want to expand that. We joined the AFI Inclusive Green Finance Working Group just to build more capabilities and to understand a bit more what the market is doing. We are enhancing governance. I think my brother DG Sec did mention this. So we've issued corporate governance frameworks across different regulated institutions. We've also aligned that with the recently issued National Corporate Governance Code. And then improving female representation remains very important. We gave direction to banks to ensure that their boards and senior management have certain levels of representation. We're also looking, and we expect them to report this in their annual reports. We're also looking to ensure that female financial exclusion is reduced. We recently launched the framework for advancing women's financial inclusion, which actually just, one, identifies the challenges with female inclusion, and provides 8 key imperatives for all stakeholders to follow in order to reduce this. And I'm very glad, to say that we've seen a lot of female leadership representation in the financial sector as a result of concerted efforts by the central bank in this respect. Our agricultural interventions are well known to all of us. We're supporting the gas expansion program, working with the fiscal authorities, because it's, giving the potential for growth in the population and the fact that we will need energy sources. We want these energy sources to be cleaner and greener. And that is what that effort is focused on doing. And we're also hoping to help fund 7 million solar connections across the country. So a lot has been done, and policymakers have this at the forefront. But just to close by saying what other potential actions could be taken. One, we need to give incentives to financial institutions to pursue green finance. We need to ensure that there is long-term funding for MSMEs to transition into low-carbon technologies. We need to gather more data, because in estimating what the impact of climate change will be on bank balance sheets, yes, we can see that it is reflected in the usual risk parameters, but we need to better understand the transition mechanisms and how these translate into the risk potential on the balance sheet. We need to raise awareness, and that's where I think policymakers have a huge platform. The huge significant convening power that central banks have can elevate this conversation across jurisdictions, can ensure that financial institutions have the right incentives, to finance this significant investment that is required for a just transition in Africa. And also, of course, we have policymakers have the technical ability and the infrastructure, to pull all of this together. We also need to be looking at financial inclusion, because there's a lot of conversation about how financial inclusion can help build resilience when these extreme weather events happen, and build resilience during the transition. So in conclusion, ESG risk factors will become better understood as, we progress. And it will be important for organizations to start to think about how they integrate this into their strategies, and how they place accountability at the very highest levels of the organization for implementing some of these strategies. For policymakers, as I mentioned, potential risks to price stability, financial stability, and other mandates means that it's also a key focus. On the policy side, it will be about being a bit more clear about data and about transmission mechanisms and about creating models that can accommodate the long-term nature of this risk. And generally, I'd like to just say that, collaboration will be really important. Investment will be critical as well. And integrating ESG-related issues across the policy-making space would be totally critical if we are to not be left behind, but more importantly, to, achieve and realize the gains that a transition to net carbon zero can bring to us. Thank you very much.
Thank you very much, so much. This is Aisha Ahmad, Deputy Governor, Central Bank of Nigeria. Even though she veered a bit from the topic that was given to her, she still dealt with it very, very well, the one she introduced. At this point, I would like to introduce the President and Chief Executive Officer of CFA Institute to have a word with us.
Thank you for having me, albeit virtually. I'm Marg Franklin, President and CEO of CFA Institute. My thanks and appreciation to CFA Society Nigeria for organizing this meaningful event. I'm so grateful for the hard work of our societies and many volunteers. I'm also deeply appreciative to those in the industry who have continued to enthusiastically participate in our events around the world during the pandemic. CFA Institute's mission is to lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence for the ultimate benefit of society. I am particularly inspired by the words of our mission for the ultimate benefit of society. We're at a moment in time where investors are seeking more purposeful approach and are recognizing the importance of finance and investment in the context of society as a whole. This approach will have a deep impact across the investment universe, but also in developing markets, perhaps even more so. Africa continues to grow, both as a financial center on the global stage and as a key market for CFA Institute. According to the United Nations, between now and 2050, more than half of the global population growth will take place in Africa. By then, this continent will represent a quarter of the world's population. Incredible. And Nigeria sits at the top of the list in terms of population growth in Africa. The next generation in Africa will unlock incredible potential in the ways that we leverage financial services as a force for good and develop financial markets that cater to the vast and varied needs of this population. There is such great promise in this part of the world. Efforts to educate investment professionals and instill the highest standards of professional ethics remain critical to the financial stability of all who reside here. CFA Society Nigeria has done an incredible job in making that a reality. In fact, since its founding in 2012, CFA Society Nigeria has experienced exponential growth, and we anticipate that will continue given the deep CFA program candidate pool that the Society has cultivated. We've taken great steps to increase accessibility and affordability of the CFA program in Africa, most importantly by increasing the test centers in country to allow candidates to sit their exams without the challenge of significant travel times. We're hopeful that post-pandemic, the candidate experience will continue to improve. We know it has not been an easy time for our candidates. A powerful appetite for learning exists in Africa, and we want to support that in every way that we can. We're incredibly proud of the Society's work here, regularly influencing meaningful change through their efforts to promote more gender balance in the industry, through the Research Challenge, and by advocating for investor rights, ethics, and market integrity in Nigeria, among other undertakings. These efforts will continue to foster real change for the investment professionals of the future. Our industry plays an essential function when it comes to providing capital to fuel economic growth and to help achieve financial security for individuals. We must be led by our clients and be educated and prepared to respond to their investing objectives. As we all know, interest in ESG products continues to soar. Today's savvy investor demands ESG analysis as part of the fundamental work of investing. So there's simply no debate in my mind. ESG analysis equates to fundamental analysis, and properly constructed ESG products meet a definitive investor need. CFA Institute stands at the forefront of efforts in sustainable finance and ESG, launching initiatives to ensure our members and those of the industry at large are well prepared to tackle ESG investing considerations. This includes our new certificate in ESG investing, the first of its kind to be offered around the globe. This education program represents a new global qualification for ESG and investment management, aiming to strengthen market integrity by delivering the benchmark knowledge and skills required by investment professionals to integrate environmental, social, and governance factors into the investment process. We also released the first edition of our voluntary global ESG disclosure standards for investment products on November 1st, another step towards hopefully ensuring transparency and safeguarding trust in our industry and ESG investment vehicles. The standard's purpose is to provide greater transparency and consistency in ESG-related disclosures, resulting in clearer communication regarding the ESG-related features of investment products. As we look to the future, we will continue to invest in our ESG efforts. We will seek opportunities to educate investment professionals through our professional learning platform, further integration of ESG into our curriculum, development of thought leadership materials, influence and collaboration with regulatory bodies and industry organizations, and more. We know these efforts are critical for the industry. The reality is that each part of the world is at a different stage of this journey. In Africa, important steps are being taken to further the sustainable finance agenda. As investment professionals, we play a key role in working with governments and regulators to establish market integrity and bring the demands of the investor to the forefront. The urgency behind progress on these fronts cannot be understated. Now the hard work really begins. In the meantime, I'm confident that you'll leave today's conference feeling informed and inspired to incorporate the takeaways and considerations of the sustainable world into your everyday work. As a parting remark, I'd like to challenge you all to figure out ways to think better, invest better, and to help understand how finance can be a force for good. Thank you again for affording me this opportunity to address you today. Be well, everyone.
Thank you very much to Mark Franklin, President, Chief Executive Officer of CFA Institute. We are now devolving into the next roundtable session, which discusses the topic ESG-focused investing, opportunities and challenges in Nigeria. This is the session that tackles what happens in the domestic market, having discussed in the earlier session the perspective of international players. And I have on this panel the following people to do justice to this topic. Mr. Uche Oji, the Managing Director, CEO of Nigerian Sovereign Investment Authority. Temi Pokuola, CFA, Chief Executive Officer, Nigerian Exchange Limited. Rukaya El Rufai, Partner, Sustainability and Climate Change and Public Sector, PwC Nigeria. Sholape Hammond, Special Advisor to the Governor of Lagos State on SDGs and investments. And Mr. Dr. Gregory Uvier Jobome, the Executive Director and Chief Risk Officer of Access Bank PLC. This session is going to be moderated by Dave Uduanu, CFA, the Chief Executive Officer of Sigma Pensions Limited. Dave, over to you.
Thank you. Thank you very much, CFA Society, for having me moderate this panel. And thank you, the Board of Governors and the ED, Yemi, for such a this session, which is coming at, well, the context of COP26 could not be, this is a good time to talk about issues of ESG. You already introduced the panel. What I'll do, I'll just make some very, few statements, and then I'll go straight to the panel. My job as a moderator is very easy. Basically, we at the pension system in Nigeria, in terms of ESG, the ways and what I would like the panelists to do as they prepare to make their remarks is, how do you integrate ESG in whatever it is that you do? So if you're an investor in your investment process, if you're a regulator within the space of those that you regulate, and if you are in government, within the framework of what you do in government, within the pension space, I think the early days of ESG started when we began investing in private equity, and I certainly was my first introduction to the principles of ESG and ESG integration in private equity investment. I remember sitting in, one of those conferences in Cape Town, listening to this lady ramble about ESG. That was about 10 years ago, and I'm wondering what she's talking about. To today, where ESG is now mainstreamed into investments. In the space, within the pension space, I think all the PE funds we invest in are ESG compliant and have ESG integrated within the investment process. And one of our things we do at due diligence level is to look at what they are doing with respect to ESG. Specifically on the investment side, I think the green bond space, the government green bond and Access Bank, pioneered the private sector green bond. I'm happy to have somebody from Access Bank today to talk about it. But are there huge opportunities within the ESG and responsible investing or impact investing or sustainability investing space within the pension space? At 13 trillion of assets under management, I don't think up to 1% is allocated to what you can call, sustainable investment asset class, whether it's green bond in the public sector or in the private sector, and there's a lot more that can be done. The interactions within that space today is primarily through the private equity space, through infrastructure space, and increasingly through the housing, investment in housing. But I think that there's quite a bit that can be done. But basically for us at Sigma Pensions, one of the things that we did very early in the day when Actis invested was to come up with a GABC principle which governs what we do with respect to gifting, anti-bribery, and corruption practices. And this is embedded in everything we do in the company, and that has led to a push within the pension space of ethical principles of ethics and how we engage with the broader market. The other thing I think which is significant is the introduction of the ethical fund or the Sharia compliant fund, which is essentially investing along Sharia compliant principle, but almost along the same line as most responsible investment asset classes will. And this is something that I believe will gain traction simply because of, one, the huge number of population of the market that's interested in investing along the Sharia principle. And I think it's just the right thing to do. And I think the final point is that for me, ESG is not one of those things you do. ESG is integral to the investment process. And I dare say that whether you call it impact investing, and one of the things we say that every time you make investment in Africa, you create impact, because you create jobs, you build infrastructure, you get women involved, you get financial inclusion, and there's quite a lot happening. So with that context and opening remark, I would like to turn to the panel. I think I want to start with Okey, who runs the Nigerian Sovereign Investment Authority. Uche, maybe you spend some time to tell us how you integrate ESG into your investment process. I would like you to specifically mention one or two investments, whether it's impact, sustainability, that you are most proud of and what you did, making that investment.
Thank you. Well, thank you very much, Dave, and thank you, everyone. So far, I think this has been a very good conference, and I've learned quite a little listening to everybody else speak. I think the question to me is very direct as to what have we really done in this area, because I think the one way to forget the real meaning of something is to give it an acronym, and then people can start to interpret it differently as they choose to see fit. In our case, it's very simple. There are a number of things that we have done that we believe are perhaps direct test cases, in addition to ensuring that we are integrating it in terms of how we look at investment opportunities. To start with, we've only recently put up a policy around ESG. We've actually hired a team to now start to not only drive and direct investments in some of the areas that we consider as important for both sustainability and environment, but also to help us review external investments we're making with portfolio managers as to how they are looking at environmental and sustainable and governance issues in the investments that we make. I'll speak to a few specific things that are ongoing. We started to look at playing a role in power, for example. And I will be glad to just let you all know that I think we are now on the verge of, we're probably going to be breaking ground in the next couple of weeks in Kano on what will be the single largest solar plant in this country. So far, small as that may seem in the global context, but it's a nice step in the right direction. And we have worked very specifically now with, we're developing what we call a renewable energy platform, which we're doing with one of the multinational, multilateral lending agencies to roll this out from Kano to most of the states that have good access to sunlight. So over time, we expect to create a portfolio of these projects that could total in the hundreds of megawatts. The test case that we're launching is only 10 megawatts in Kano State, and that should be completed next year. But one of the things that we have found particularly interesting is in the area of overall sustainability. And one of the things we've been working on the last 3 years, actually maybe 4, is in the area of land degradation neutrality. Because it's one of those things that people have not really, in my opinion, paid close attention to. The level of deforestation in Nigeria is truly frightening. And many of you who may not have had the opportunity to travel around the country by road, as I have in the course of my work, can attest to the challenge that this really poses to Nigeria. And it's not just an issue in the north of Nigeria or the middle belt of Nigeria. It's actually a big issue in the south of Nigeria, and perhaps an even bigger issue. The first key project we're working on here is something we signed about 3 years ago, where we've taken about 400 hectares of deforested land in Okey State, and we're trying to master plan it now and turn it to something like sustainable forestry and sustainable and creating a biodiversity investments around it. Now, these all sound like little pockets, investments here and there. The reality is that we believe this will create, in our opinion, a test case for how we will then try and roll this out across the country, so that we can start to attack some of these key issues around the social impact for the country. So if you look at all these environmental challenges in Nigeria, we have, in our opinion, seen big opportunities, and it's beginning to now reflect and it actually drive some of the things that we are aggressively investing in. And the last big one, and I'll probably stop here because I know there's been follow-up questions, is you've heard us announce an investment in the creation of an ammonia plant. What is not being said is that we're actually using as our feedstock flare gas in the Akwa Ibom area as a key source of gas for the creation of this ammonia plant, which goes on to create a bigger fertilizer subsector. It does two things for us. We believe the environmental impact of flare gas gets reduced, but we also believe we can convert it to something that's very usable. This has gone quite far. We're doing this with OCP of Morocco. So you asked me for specific examples, Dave. I can go on and on, but this has become really key for us in terms of what we do. It's reflecting in our investments in healthcare, it's reflecting in investments in agriculture, it's reflecting in our investments, even in the toll road projects that we're handling. The Abuja-Kano road we're building, we're using a coal recycling methodology to actually recycle existing asphalt instead of having to buy new ones. And I think it is important you bring these things down to reality of what it means for you an investment perspective. And so this just gives you an insight as to how we think about the investments that we make and the role of ESG. Of course, one more thing on social impact. There are many other sub-segments to social impact. Of course, the role of women, what we can do. There are many other things that we're also working on in terms of making sure that there's attention paid to issues such as gender diversity. In Nigeria, I don't think that is something that has received, in my opinion, the level of focus as it should. We assume we're okay there, but we're just not necessarily in some areas. And within the NSI and the way we run it, we also make some of these key areas in terms of how we balance some of our portfolio companies. I will stop here because I don't want to just keep rolling out all our list, but just to give you an insight as to it's a key area of investments for us. It's something we consider as we make investments, and it's something we're reflecting even in external managed investments as we give allocations to portfolio managers. Thank you.
Thank you, Uche. And I think it's very important, and obviously the role you play at the Sovereign Wealth Fund, where you are giving money to these external managers, similar to what we do, but I think you do a lot more. Maybe we'll come back to you on the other areas you are playing a role in this regard. So I would like to turn to Temi. So Temi, you run the NGX, Nigerian Exchange Limited. And I think it's important for you to also let people know how it's different from the stock exchange, but more importantly, you're a marketplace for listed companies. What are you doing to make these listed companies just think in terms of ESG, in terms of the operations, and more importantly, reporting? And also like you to touch on the G of the ESG, the governance, because this is an area that I think, personally, as someone that has invested in listed companies over the last 10, 15 years, there are issues around governance of listed companies, what they are doing and what they are not doing, and then sustainability. Again, make it straight to the point, brief, so that we can engage further. Thank you.
Okay, thank you very much, Dave. Let me start by commending the CFA Society and to thank you for this opportunity. I've enjoyed the discourse so far, and to say good afternoon also to all the panelists here. I'll go very quickly into it. The first thing I'd like to say is that, the subject of ESG, and Uche touched on this as he was speaking, I think it's gone now from just being a buzzword to actually just being the right commercial thing to do. If I look from the lens of an exchange, in 2020 alone, if you look globally, there was $730 billion worth of capital raised towards sustainable activity. So this is the trend and the direction that, if you look at sort of the capital raising community, is going, whether that's from the equity asset class. Asset managers are struggling more today to raise capital if there isn't a sustainability part to it. And the same thing goes on the debt side of things. Now, bringing it home as an exchange, I will take the three different pillars of the ESG and speak to what the exchange is currently doing. You might be aware that the UN has a Sustainable Stock Exchanges Initiative, where it tries to, get exchanges globally to come together to get a framework for how listed corporates on their exchanges perhaps can think about reporting on sustainability, can think about how they integrate sustainability into the things that they do. We are one of 4 African countries who have signed up to this, and we did this very early on. We're one of 56 countries so far who have signed up to this. Now, practically, what have we done? We have a partnership with the GRI, which practically works with many of our listed corporates along some of the lines that I've spoken to, the importance of sustainability, how to report on those, and really what the benefit, as it were, of these sorts of directions are. Away from that, we are also in several partnerships. One notable one, speaking to the governance side now, and I'll address that a little bit more deeply, is a partnership that we have with the IFC. Earlier this year, we did do quite some work around what we call the Gender to Equal program. And what we try to do here is to think through the subject of gender balancing slightly differently, is to think through just away from just employability, but to look through, if you were to vertically integrate as far back as possible with listed corporates, how you can insert more diversity and gender balance to all of their, call it, ecosystem and the cycles, whether it's from procurement to all of the other partnerships that our corporates have. This is a body of work also that pours quite some resource into research. So we, for example, would look at corporates in Nigeria and try to rank and try to showcase what companies we think are doing the right things in this direction. Now, as it concerns governance, one of the other things that we found, and you would find quite a few studies that support this and corroborate this, is that boards that have fairly decent representation are better governed boards. Is that companies that have the right sort of balance from a gender standpoint deliver more returns to shareholders as well. So we're doing a lot of active work to try to promote this with a lot of our corporates. We do this again from everything around capacity building and development to more sort of strict, stringent ways of getting them to report. If you look globally, NASDAQ very famously tried to institute some sort of gender balancing as a prerequisite for corporates to list, for example, and has some disclosure rules around them. I think this is probably ultimately where we're going to head and where we're sort of thinking through this. But at this point in time, I think in summary, until there are several partnerships that we have gone into, and also as an institution ourselves, if you look across not just the exchange, if you look across the entire NGX group, you would find that, you know, really do walk the talk. Our boards are very, very well balanced. In fact, some boards have more representations of females than they have males. And at the more operational executive level as well, you would find this sort of balancing. Let me pause there, Dave. Thank you.
Thank you, Chami. It's good to hear that you are doing quite a bit, actually quite a lot at the NGX. We'll come back to you on, I think I want to pick up the issue of gender balance on board, but I'll come back to that. So let me turn to Ruka. You've won, you continue to wear many hats. I almost called you your former, I almost referred to you with your former title, but you are partner at PwC. You've been in government. Now you're in charge of sustainability like climate change and public sector. But I remember 2018, you walked into my office whilst we were at Deloitte to talk about sustainability reporting. What are you doing now at PwC in that area of sustainability reporting, and how are you helping your clients to navigate the climate change initiatives, and particularly the public sector within this the background of COP26? Is this something you are working on actively, and maybe give us some context?
Okay, thank you. Let me start by also thanking the CFA Society of Nigeria for the invitation and opportunity to speak on this very important topic that we're so passionate about at PwC. So I'll start off by kind of giving an overview of what we try to do in PwC, how we're supporting clients. So I don't know if you've noticed, we've launched a new strategy globally because we believe, you know, it's important that every organization goes back, you know, to look at the way the world is, you know, with the asymmetry, inequality, broken trust, you know, and all the issues. So now businesses, you know, are not in isolation of the societal issues. There's a huge impact. So at PwC, for our clients, we've refreshed as well in line with our new equation, bringing together our community of problem solvers to, you know, create solutions, you know, innovative solutions that is human-led and tech-powered. And, you know, we're looking at ESG by helping clients from strategy through to execution and reporting. So, ESG has to be integrated end to end, because gone are the days where, companies need to see themselves inwardly in isolation, and how they can increase enterprise value to also looking outwards, and, how they can also increase societal value. And that's why there's that shift from shareholder capitalism to stakeholder capitalism. And, to achieve that effectively, you have to integrate ESG as part of, you have to imbibe, down from your strategy, the kind of products you have out there, to your execution mechanism, embedding in, your risks, your operating model, your governance structures from the board, from the board all the way down to data as well. ESG data is very important to how you assure, that the data that comes out is trusted, investor grade, and of high quality that will feed into your report. And now coming to the report, we also try to support by defining, that reporting strategy, because there's so many frameworks out there. There's the issue, there's the discussion of convergence of those. We were happy yesterday, IFRS issued, a statement. So there is that convergence and harmonization to create comparability and benchmark, which is also an issue with impact investing, with the impact data, the ESG data. So excuse me, please. So what we're now, so we have 6 offerings majorly that we think would help solve clients' challenges: strategy and transformation. We also have reporting and assurance. We are also looking at responsible sourcing, because supply chain is a big deal. There's climate change, which net zero would fall under. There is responsible investing, which is why we are here, because impact investing is the way going forward, and also sustainable finance. I mean, at the opening, we spoke a lot around green bonds. So now moving down to climate change, and which is what part of what we are doing for ourselves, because we have also committed to be net zero by 2030, and I'm the net zero leader for West Africa. So we are involving ourselves, and we are even trying to reach out to clients, So of course, climate change, net zero, would involve those big sectors that emit the most: transport, energy, agri, and all. So we are, trying to collaborate, kind of support the ministry as well, with especially how to track, because climate change is very data intensive. It's very complex. It's science-based. The way you set the targets, the way you track which emissions, which scope, based on the greenhouse gas protocol as well to track. So we are trying as well to support clients with, even if it is to start off with understanding the baseline, and then, you can now set targets along those 3 scope areas, and then, innovate reduction strategy that will, and that transition pathway to get you to net zero. And I mean, people think net zero is about direct reduction, but what's also very important is that carbon trading, which is one of the key topics at COP26, so because, if you can't reduce directly everything, all your activities, but you can offset, and buy carbon credits, even for buildings, because right now the options, especially for us in developing countries, feasible options, are not there, yet. And now to move into COP, for COP, COP targets 4 goals: adaptation, mitigation, mobilizing the 100 billion that, I think won't come as free as people are expecting, because we need to also have robust transition plans like South Africa. You can see the kind of money they've gotten. You have to have your clear plans and the M&E framework to be able to attract, those funds. And of course, the decarbonization strategy Nigeria has committed to 2060. So this will be interesting to see how that will be broken and how that transition in a just way and, in a stable way, so we don't have energy crisis and have more, economical challenges that would follow. I mean, we're waiting to see the outcome of COP as well. We hope that, countries will commit, and, we're seeing private sector is even taking it more seriously. They're leading. Let me give you an example with automobile. The path the car manufacturers have taken to stop manufacturing combustible engines have made, policy irrelevant, because the cars wouldn't even be available. And this is, an area for Africa to actually think about, because we're having a conversation the other day. We're like, okay, the world stops producing cars. We become, of course, probably a dumping ground. But even if we get fossil fuel cars, whether if they're secondhand, what happens to spare parts? So, for Africa and Nigeria is, those countries in a dilemma where we have to create something that works for ourselves, because we need to develop. I know there is that just transition, but I think we have no choice but to also, create our own transition pathway that works for us. The inaction definitely cannot be the pathway to follow. So thank you.
Thank you, Rukaya, for that insight. Very good point you made, because if beyond the dumping, let's say we get to a point where they are not manufacturing those type of cars anymore. So the issue of who is going to buy the oil to power those cars won't arise. I guess we are in for, some interesting times. So let me turn to Greg, Dr. Gregory Jobome. I hope I got the pronunciation right. You head of risk at Access Bank, and I remember Access Bank issued the first private sector green bond. That must have been 3 years ago, and it was I think we invested in it, and the uptake was quite interesting. Can you speak to us about some of the lessons you learned from this process? What was your experience like, and how do you think that, based on the experience you got from that process, we can drive for the ESG type investing in Nigeria, particularly look at it from the angle of the private sector and maybe financial institutions? Thank you.
Okay. Thank you very much. I hope everyone can hear me okay.
Yep, clear.
Very good to be on this panel. Thank you to CFA Society Nigeria. A truly august and well-timed event. I don't know if you planned this with the COP organizers for this to happen in the middle of the COP26, but definitely very auspicious timing, and I'm glad to share some thoughts on this panel. Well, it's a very exciting day. I mean, it's the kind of thing that we've been building up to in Access Bank for the past 12 years or so. It's been a long journey, and truly, we did believe that this kind of era would come eventually, and it helped us in our investment process. We didn't set out to issue a green bond in 2008 when we started the journey, obviously, but we started off to be more sustainable in our activities. The early exposures came from working with our DFI partners, the likes of FMO, the likes of IFC, and they were indicating a number of ESG-related requirements as part of, what at that time was still normal funding, And we thought, well, it's a new dimension to things. Let's see how it works. So we invested in it. We set up a sustainability unit, and we also set up a team we call Environmental and Social Risk Unit. Now, these are very critical investments by the bank, and really they supported our journey over the past number of years. But it was important from the outset that we keyed into things like the SDGs, the NSBPs, which is the central bank midwives, and ensured that we had It's not just to speak about the SDGs, and it's not just to do the compliance aspect of it, but you can do just the compliance, which is be compliant with the requirements of the IFCs and the other development finance institutions, or you can also make it part of your business model, which is what we chose to do. Now, how did we make it part of our business model? Is by ensuring that the major activities of the bank have ESG embedded in it. And that's typically through the lending process. So every single loan request that goes through my system for the past 7-8 years actually goes through an ESG filter, every one, and each one is scored categories A to C, depending on its expected impact on ESG perspective. So that helped us. It means that we know today, for example, what are in our category A, and we have targets internally to drive those down. Was in category B, was in category C. Some have what we call ESAPs, which are environmental and social action plans, to deal with some of the impacts that we're seeing, and we do site visits to be sure they're all on track. Now, so all of that was pivotal in building up towards a green bond, because we already had a critical mass of expertise in-house, a very strong network, both within Nigeria and with our partners abroad. Within Nigeria, the likes of FMDQ were quite critical in kickstarting that green bond program. That was very powerful. SEC was powerful. When FGN came up with their green bond, again, that was very inspiring, because we knew that, well, clearly it is possible, and it also provided the price discovery, and obviously as a sovereign, it was always going to be a bit more cost effective than the private sector issue, but it gave us something to work with. It gingered us, so to speak, and we got to the finishing line on time. So the reasons for doing the green bond, well, obviously I've already cited some of them. Wanted to align the 3 Ps, as they say, the people, the planet, and prosperity. The benefit of a green bond is that it forces you to actually do sustainable things. That is, you have no choice. On both sides of the balance sheet, so you're getting funding that is green. You can only do green things with that funding. So on both sides, your hands are tied. Even if you were not interested again, you cannot stop midway because your reputational impact is going to be huge. So it focuses the mind. It ensures that your governance remains on top. It ensures that your business is focused on it. And at the end of the day, we have discovered from that experience that doing good is actually good business. What I mean by that is, since that green bond was issued, I can speak to some of the challenges later on if there's time, but since we issued that green bond, we receive offers now of green funding, climate finance. Partners are more willing because they know we have a structure and a system and a governance in place to drive it. And when they do their due diligence on us, it goes reasonably well because, again, we're in the space, so to speak, and it makes for an easy engagement. Now, a few final things I would say just before I stop is around the learning points. So the learning points that obviously we were first mover, and that made it, there was no one in the private sector to leverage the experience from. So we had to literally chart our own course. Engagements were a bit labored. So when you do a normal bond, you probably deal with maybe 10 parties, no more than that. For a green bond, suddenly we had to deal with probably 17, 18 different parties, all with sometimes conflicting requirements. You need several ratings to be done. Internally, obviously, we had never done one before, so the governance had to be right to meet those standard requirements in line with best practice. All the verifications had to be done. PwC UK was closely involved in our verification process, had to be certified. We didn't want to cut any corners. But one thing that we're very keen on was to get very strong Nigeria-based investor base to support the green bond. Unfortunately, at that time, our international partners were struggling with the exchange rates issues with dollar. So it made sense at that time to go with 100% Naira-based domestic investor. And I'm extremely proud that our investor community, rose up, saw the business case, and keyed into it. And that's made a very powerful contribution. Thank you very much. I'll stop here for now. If there's more time, I can share some other ideas as we go along.
Yeah, thank you very much. I mean, for that insights, very, very helpful. And very good to see that you now have an ESG filter. I would like to learn more about it at some point for the loans, because I think that's a good thing to do. But so we'll come back to that. Let me turn to Sholape, who is a special advisor to Lagos State on SDGs and investments. So Lagos State is home to, maybe you tell me the number, between 12 to 20 million people. You can pick a number in between. But I think the more important thing for me is growing population, issues around waste disposal, issues around water, provision of clean water, and many, many other issues in Lagos State, social issues in Lagos State. How are you dealing with these issues? And from an SDG perspective, how are you, how are you ticking the box with respect to the various pillars of the SDG? Thank you. You're mute, Sholape. Hello? You're mute.
Unmute myself. Good morning. Yes, can you hear me now? Okay, great.
Yes. Yes.
Hello, can you hear me now?
Yes, we can hear you.
Okay, great. Good morning, everyone. I also want to say a very big thank you to the CFA Institute for this invitation. It's been a very exciting morning, and I think I've learned quite a bit from both the keynote speaker and the previous panel, and of course the panelists on this particular topic. So I think quite simply, what I will say is Lagos, for us, the way we see it, our challenges are actually the opportunity. Indeed, Lagos itself is the opportunity. Yes, there are significant challenges, and the estimate we have for the population is actually between 22 and 26 million people. I sincerely hope that will be validated next year when we finally conduct a national census, but that's the estimate that we have. And of course, we all know that there's a significant amount of migration into Lagos every year. It's estimated to be somewhere between 700,000 and 1 million people every year. So that's quite a lot of people. So it's estimated we have roughly about 10 to 12% of the national population on this tiny piece of land, one of the smallest states in the country. So you can imagine the pressure. And the opportunity abounds, obviously, as I said, in many areas. We've heard a lot of talk today about power and the energy sector. For us as well, given the density of Lagos and the sheer number of people here, transportation is also huge. Waste management is also huge. Lagos is estimated to generate somewhere between 11,000 and 15,000 metric tons of waste a day. Food security as well. We have to feed all the people who are here. Materials and infrastructure, construction. I think Rukai or someone had talked earlier on about materials, which is extremely critical. And then of course finance as well, because Lagos is a commercially viable city. And I think that also is part of what makes it such a great opportunity. There are a significant number of challenges, but one thing Lagos has done consistently over the last couple of decades is to show that you can always find a commercially viable way to address those challenges. We've successfully done it with transport, to some degree with power, at least publicly provide the power to power the public institutions and street lighting, and in education, in healthcare. And so that also sets a good stage for being able to leverage alternative financial instruments to address the challenges that are present here. For us, for us in Lagos, we've made the SDGs a cornerstone of the administration. We have an administration, a development agenda for the administration, which is the themes agenda, which looks at traffic and transport management, health and environment, education and technology, making Lagos a 21st century economy, which is where we look at agriculture, housing, power, and all the other things that you require to truly be a functional global city. Tourism and entertainment, and then security, finance, and governance. But we have mapped the KPIs for all of those to the SDGs. And so we have a very robust way of looking at them and trying to, and measuring our progress indeed on the development agenda. So that's the first thing that we did. We mainstreamed essentially the SDGs in the state and have worked assiduously to measure our progress towards the SDGs. So that gives us a really good and solid platform for approaching investment. Indeed, one of the first things the governor also did was to transform the State Investment Promotion Agency into the Office of the SDGs and Investment, because we want to look at our investments and source our investments through the lens of the SDGs. So, again, I think, just to quote the last speaker from Access Bank, or to paraphrase him, doing good business is good for doing good is good for business, and that's what we're finding in Lagos. With regards to our approaches to solving that problem, and I think we've heard a lot of things from people today. We've talked extensively about the fact that the pension funds and pension institutions need to get into the game and really be able to fund things from a sustainable perspective. I think Rukai also mentioned insurance, and I'm so happy that she mentioned that, because it's something that we're looking at also to help us address one of the big challenges we have. So flood risk management in Lagos, and indeed disaster risk management as a whole. We're looking at that as a framework that could help to address that issue from an adaptation and loss and damages perspective, which is very critical. We're also looking at sustainable financing, and we know the country, Nigeria, has gone ahead. We've done 2 green bond issuances. Access Bank has done their private issuance. Lagos is also working with the Financial Center for Sustainability and FSD Africa to also create a green bond framework so that we can also access green bonds, blue bonds, and other forms of sustainable financing that are there to address our needs. And I think really this is where a lot of the opportunity is for Africa. It's estimated that there's about $1 trillion in funding available for green bonds, and about $250 billion have been accessed across the globe, but Nigeria has accessed less than $500 million. And so that is truly the opportunity that presents itself. Of course, we know we have challenges around currency risk. And so in Lagos, we've been trying to work very innovatively around finding local currency funding for the challenges that we have. We are actually in the course of wrapping up financing from an international development partner in local currency, which will be their first local currency issue in Africa. So there are many facets to the problem, but without a doubt, we know that in Lagos, we will find a solution, because we always find a way to make it work.
Thank you, Shalagwe, for that intervention. I think it's quite good to hear all the things that you're doing in Lagos State, and I hope that the other states will copy some of your initiatives, particularly your neighboring states, and then maybe you can extend it to further down. So let me turn to a part of the ESG, which, so there are components. I think we have, 20 minutes left, but what I would like to do is to turn to 3 subjects, and you can pick each of those 3 to focus on. Diversity, in the area of diversity and inclusion, I want to look at things like how do we increase companies that are led by female-led companies, listed companies that are led by females. I don't know what the stats are. How do we, encourage more gender balanced boards? And also, maybe this would be for which gender lens funds when you are selecting making your investments. I don't know if you've done any, and if you haven't, what are your thoughts around there, and generally financial inclusion? I also like to talk about the supply chain crisis we're having globally, and how through our investments that are in compliance with ESG principle can, intervene in that area, maybe Uche and Access Bank. And finally, I think Rukai mentioned one of the topics I like, which is from shareholder to stakeholder capitalism. Is this a myth? How would this work? How do you ensure that you don't compromise investment returns? The author of ESG implementation. So out of this, I've just reeled out quite a number of topics and issues. So you can pick anyone you like. Maybe I'll go in the same order with Uche, starting with Uche, and then I'll just go around Uche, Rukaya, Temi, and then we'll just go around.
Okay, well, thank you. I think, let me just be sure I can steal the question. So it's about comments around gender-based and diversity-focused area of social impact, and then to speak about the supply chain challenges in the whole world and what it means for us. So let's start with the gender issue. For us, it's something that we, as the whole world, needs to understand is actually good business. So let's not just approach it from something that is nice to do, and we're doing it just because. We need to approach it from the standpoint of the fact that it is very good business. And I point to a statistic I read many years ago, actually, I think when I was still in university, written by The Economist, about the difference between China and India. Similar populations, one has an economy multiple of the size of the other one. And in the bottom line of the analysis, it came down to the role of women in the workforce. China integrated them as equals and India didn't. And over the years, you saw the divergence in terms of the size and development of both economies. I mean, of course, there are other factors at play, but that formed an impression. So I think by way of what we need to do, it is important that we place it from the standpoint of the fact that it is good business to not only encourage the role of women not in leadership in the workforce, but also in the things that they drive by way of funds. We've had a specific focus in this area, and we've invested in a couple of women-led funds. But again, I approach it from the standpoint of what they're doing makes sense. And the fact that it's led by women is an added bonus, and we encourage that, because what we have noticed over time, even those that have very good ideas struggle to even start to raise funds. So they're all a little bit concerned, will they be supported, and so we have taken a stance to back as many of those funds as possible. I mean, we also back just about every private equity fund that there is in Nigeria. So for us, that's number one. Number two, the NSIA holds a significant chunk of shares in trust at the Development Bank of Nigeria. Many of you may not know this, but we actually almost co-developed that fund. I was interim chairman. And we do have a gender-focused lending championed by the Development Bank of Nigeria, on which board I sit on as well. So I don't have the statistics off my head at the moment, but there's a significant chunk of the lending targeted at small, micro, and medium-scale enterprises out of the DBN that is also gender-focused. So for us, this is important. And I always keep pointing out to most people that, a vast majority of the NSIA ESCO are women. So we have all this as things that we take very seriously. But again, again, this could sound not particularly what people would like to hear, but my view with these things is that you start off by assuming and believing that competence and what they do is tops, and recognize that and then support that also, because what we have found is most women are not as aggressive in being able to raise capital as the men are. And so if NSIA comes in and says, here's a seed capital, go out there, tell the world NSIA is invested in you, it will help them raise capital. And that is what we continue to do. So that's on the gender side. The supply chain issue is a major issue for the world, and it's coming at a time when there's so many things going on, and we're seeing the impact of that. And I think for me, for the first time, the supply chain issues is telling us that there are limitations to trade. You can't, build your whole economy around efficient trading systems, because moments like this remind you of the dependencies and the risks that we run. And it speaks to the need to actually make sure that certain areas that are strategic are developed locally. And for us in Nigeria and in Africa, I think we need to rethink what this means for us economically. I'll speak to two specific areas where we're seeing a complete disaster unfolding. One is in the area of fertilizers. And it speaks to one thing that we need to also come to terms with. The Western world needs to come to the terms with the cost of the transition in terms of climate change issues, which is leading to high natural gas prices, which is also complicated now, leading to high fertilizer prices. Nigeria is an agri-dependent economy. 33% of our GDP, we're heavy on fertilizer consumption. Fertilizer prices have more than doubled in the last 9 months. Actually, in some cases, tripled and rising. So being able to address this for us is very crucial. Otherwise, we're going to have much more serious implications down the road, particularly for 2022, where the average farmer is probably going to see the price of fertilizer more than double, maybe triple in some areas. The other area where we're seeing supply chain shortages is in actually being able to get equipment in for the areas that we're involved in. For example, for some of our solar projects, There's just been a complete challenge in getting these things shipped in. Freight prices have gone insane. I mean, products we bring in from China, some of our portfolio companies, we've seen freight prices in some cases quintuple, go 5 times. That's if you can even find a vessel. It's not eased substantially yet, but we're hoping that this will ease over the next 12 months. So currently, it's a big issue for us, and speaks to some of the challenges we're facing with the transition. My encouragement to the world is everybody needs to brace and fasten your seatbelts, because the transition is going to be very painful. It's going to be rocky in some aspects. But subject to a different conversation is how we balance and do a just transition, so that the developed markets and the global south do not find themselves facing penury and impoverishment as we transition this. And I think this is something the CFA Society needs to drive as a conversation, because the cost of transition and the cost of implementing ESG should not be underestimated. And the implication for the global south and countries like Nigeria could be quite significant. We're going to see it in fertilizers. We're going to see it in being able to bring some raw materials in. And unfortunately, we are also going to have to manage, as we transition, the issue of how we fund transition gas and fossil fuel. It's really unfortunate that we're just at a point where we're beginning to grow this segment. And at the moment, it's difficult to get funding. And like I said, and I need to drop it out there, it's something we need to really discuss. The subject of just transition cannot be ignored. Norway is raking it right now in gas sales, but Norway is saying people not to fund gas development in the global south, in the emerging market. Is that just? I don't know. I don't think so. So I think that there are certain conversations that we should not sweep under the carpet, that we must address. And the sooner societies like the CFA Society in Nigeria and globally take up some of these challenges, we cannot just go in one direction without looking at the implications of the other side. Thank you very much.
Thank you, Che. Yemi, I think we're stopping by 1, right?
Yes, please.
Okay, so I think what I would like to do is I've put out those topics out there. I would like each of the remaining 4 panelists to spend 2 minutes each. So tell me, one of the things I mentioned is female-led companies. How do we get more of them listed? 2 minutes.
Thank you very much, Dave. Let me maybe just spend 30 seconds of that speaking to a challenge that we have identified, which is really driven by COVID. In some sense, the COVID pandemic has caused us to take one step backwards in this sort of gender diversity subject. If you look at our country, the data suggests that 2 classes of people were materially, call it negatively impacted by all that's happened in the past 24 months. One is entrepreneurs and the other is women, whether this is, diversity on boards and management or just the ability for this balance. So it's important to be aware that there'll be a need for, call it, intensification of some of the work that had been done before now because of current day challenges. The other bit, of course, is that, I think to the point that Dave made, data supports this. There's been a lot of studies, for example, in the US, which tries to take a forefront on this. You'd be surprised to learn that it's still under 13% of companies that have female, a representation of at least 30% on their board. So this is a challenge that, developed countries are facing, and even more so, economies like ours. So what do we do practically? One of the things that we are doing is investing really into data and research, because I think that once managers and boards are able to consume data, that speaks to the importance of diversity, of gender balance, I think that really does then help to resonate that for them. The other thing, of course, is that if you go back to our country in the past couple months or so, it has been showcased, just a lot of the happenings within the financial sector, for example, about the number of female leaders there. And what we're trying to do as an institution is to highlight more of those examples and take more targeted, discussions per sector, as it were. And this would govern and guide the sorts of reportings that we do and the sorts of disclosures that we get our corporates to make. Let me pause there. Thank you.
Okay. Thank you, Chani. Ruka. 2 minutes. Difficult, but 2 minutes.
Okay, so I'll speak to the question around stakeholder capitalism to shareholder capitalism and not losing sight of profitability. So when you look at ESG, it stems from the word, it's all part of sustainability, and sustainability is really around creating long-term value that is shared. So, and when you look at that triple bottom line, there's still prosperity. So the full acronyms is even economic, environmental, social, and governance. But there's more focus on environmental governance and society, ESG, because typically people tend to be focused on economic. So it's important because when you look at countries' GDP, when you look at corporate world, there's a lot around financial. It's now that people are encouraged. So the way you ensure that you incorporate that when you're identifying your ESG related issues and topics, there's a concept called double materiality. So you engage when you're trying to distill the topics that are relevant. You engage internal stakeholders, and those are the guardians of the enterprise value, and you engage external stakeholders, and those are the guardians of that external. And every area you look inwards and you look outwards, and I'll give example. I'll give just one. Social. Internally, you look at diversity, learning, and development. Externally, you're looking at human rights, host communities, child labor, through your supply chain and all that. So ESG is about balance, including that prosperity. It's about being purpose, focusing on impact, being inclusive, and focusing on what's relevant to your value creation levels. Thank you.
Okay, Dr. Jobome, can you make your last intervention on this broad range of subjects?
Okay, thank you very much. I think for me, a lot of what you raised all boiled down to one thing. We face massive opportunity. I really do believe that we're on the cusp of an economic revolution globally, and Nigeria is very much part of that economic revolution. I've reflected over the past number of months that I don't know how we are doing this at the national level, but this is the time to now plan in an integrated manner. The government, the public sector, the institutions, the corporates, the SMEs, the women, we now need to have an integrated journey. That integrated journey, let me assure you, has got tremendous economic opportunity. There are millions of people we should be training today on things like verification, certification, what is green, what is not green, what does it mean to have an ISAP? You are a small business owner. What do you have to do for you to survive in this new world we're going into? You're a large corporate, you're a big manufacturer. Do you understand your processes? Do you know your impact on the environment, not to talk of the broader ESG? There's a whole raft of training and communication that should be happening. I'm a bit concerned that we are behind in that journey, but it's not too late. The opportunity is huge. To illustrate for you, take Access Bank now. We have measured our scope 1, scope 2, scope 3 emissions. All of that is going through an external validation process. All those technical rules, they are being given to people abroad because it has to be credible and meet global best practices. So Nigeria is actually losing money by not investing in these capacities right now. Banks and other issuers will have to pay top dollar again to experts from abroad. We are losing out, so we really have to buckle up and get that into gear. We have all the things around reforestation, all the things around expertise in chemistry, in electricity, electric cars, solar. To what extent has a curriculum been developed, even at the NUC level, university level, to kickstart? This cannot be done under BAU conditions. It needs to be stampeded. That's really what needs to be done. That's a very rapid transformation is required. And we need to just get the spark going so that we are not left behind. 2060 might seem like a long time away, and you and I might not be around then. We pray we'll all be around to witness it.
Maybe we won't be, but I need to stop. I need you to stop there. Thank you, Sholakwe. Can you just make your closing remarks? Please be conscious of the time.
Excellent, thank you. And I think I'm going to toe the line a little bit of the previous speaker and say, for me, I think what it boils down to is we need to make difficult decisions. And I'm going to anchor a little bit on both diversity and inclusion and the supply chain crisis. I think what Mr. Okey said, very, very valid points. And I think Ruka had also talked about the challenges that we will face if we don't move with the rest of the time. So we don't manufacture cars, and if we don't keep up with the time, we'll get left behind. As we speak today, Nigeria is one of the few countries in the world that still uses petroleum that contains sulfur. To be able to get the petroleum that we get, we actually pay a refinery to give us inferior products. We can just simply adjust and move on and join the rest of the world. And we do this with a lot of things. We need to look at how we are structured. We need to take a pragmatic decision about who we really want to be as a nation, as a state, as a company, and make those hard decisions. It's until we do that, we need to look at how we lend to women. So women, we know, traditionally do not own property. If a couple is going to buy, they're most likely going to buy in the husband's name. Why do we still require women to bring property to securitize facilities from banks? I think it's one of the reasons why, and I have to commend Access Bank and First Bank and a few other banks that have partnered with us and other agencies who are doing non-collateralized lending to vulnerable sectors in society.
Okay, I think we lost her there.
LSETF 10 billion naira fund for women, and it's interventions like this that will really move the needle. But I think also just sitting back and saying we also need to look at what we're doing in terms of building the talent pool to be able to arrive at those to arrive where we need to be and equip ourselves so that the rest of the world does not lead us behind. Nigeria has the capacity to be a leader, and this is a golden opportunity to be able to leverage available financing and the sustainable frameworks that are there to fix some of the really fundamental problems we have around transportation, around power, around job creation, around gender equality. And I think it's very important that we look at these decisions, take the hard steps that are necessary now so that we don't get left behind in the future. Thank you.
Thank you, Sholakwe. Thank you, all the members of the panel. I think in conclusion, I just want to draw out this key point before I hand over to Yemi, who is eager to take back this pitch from me. I think, Uche, I was quite interested in the whole gender lens financing and the point you made around women supporting them and them not being as aggressive, but also the facility at DBL. It is something that we need to let people know that it exists so that we can increase uptake. And also the issue of cost of transition. It's very, very important, aligned with the supply chain crisis. These things are very important issues. I think with Temi, the whole UN Sustainability Exchange initiative, that really would drive the stock exchange to place sustainability at the forefront of listed companies. It's something that we need to continue to push the envelope on. I like the whole double materiality impact that Ruka mentioned and the debate around stakeholder and shareholder capitalism. Some of us come from the world where profit is, well, what matters most, but now we know that we really should have a double materiality impact in the way we look at things. And I think the ESG screen that Dr. Jobo mentioned is something that I believe the banking system should embed in the way they look at businesses they lend to, and also in the pension sector, in the businesses we finance, and then the capacity building for the new world. It's interesting, we're talking about the new world, but we're still behaving as if we're not part of this new world that will emerge. And it will be good to listen to, as we go into a political transition, those that will run the country over the next few years, talk about this transition to the new world, about educating our children and the capacity building to ensure that the country is ready with the talent, with the resources, and with the mindset and thinking around the new world. There are some investment we are still making today that speaks to the old world of fossil fuel and the way the economy is being run that doesn't speak to this new world. So I think with those remarks, and it's really been a very good panel, and unfortunately the time allocated is not enough, but I want to thank Uche, Temi, Sholakwe, Greg, and Rukaya for doing justice to this topic, and the CFA Society. And I hope that when next we call on you as panelists, you will answer our call, and we'll begin to take some of these things and bring practical realities to be on them. So with these comments and remarks, I'll hand back to Yemi to continue the rest of the program. Thank you.
Thank you so much, Dave Duano, moderator of this roundtable panel on ESG-focused investing, opportunities and challenges in Nigeria. It has been a very, very well-delivered session where practical insights were given around the opportunities and challenges that are found in this area of investing in Nigeria. And to mention the efforts of CFA Institute in developing capacity. One of the panelists mentioned this in the last session, in developing capacity around this area in Africa. I have Klaus Pesler, who is going to talk on ESG certification by CFA Institute. Next is the Senior Director, Institutional Relations for the EMEA region in CFA Institute. Klaus, over to you.
Thank you very much. Thank you, everyone, and thank you for the opportunity to speak to you today on our certificate in ESG investing. I think this follows very aptly with the previous session, and especially some comments that Mr. Jabome just mentioned on specifically on education around ESG, and even more critically of speaking the same language around ESG, because I think this is clearly one of the issues as ESG gains momentum as an investing principle and as a global awareness of something we all need to do and all need to focus on, both as nations and as individuals, but making sure we are all speaking the same language. There are many contradictions in terms of what is considered ESG investing, what is considered green investing, what is sustainability. And having an educational program and a certificate can aid in that. So today, what I'd like to talk to you briefly about is the certificate in ESG investing that was originally developed by the CFA Society of the UK and has recently been taken over and will be increasingly enhanced by the CFA Institute itself. The CFA Institute, as everyone knows, leads the investment profession by promoting investment education and especially ethics, and trying to be on the forefront of what investing education and knowledge is. We aim to have a greater community of educated professionals and really are aiming to have the financial markets that are ethically and efficiently operating. And that means working with various regulators and governments, as well as individuals, to make sure that we have a robust, ethically sound, and positive market environment going forward. If we can go to the next slide, please. So as mentioned, the certificate of ESG investing was started by the CFA UK, and we have recently taken that over. And it's something that we are promoting now globally. And we are very, very proud and honored that the CFA Society of Nigeria, as well as other African societies, are taking part in promoting and enhancing this certificate of ESG investing. What we want to do with this is, as mentioned, and as some of the speakers mentioned, have increase the education level, because ESG investing is becoming a standard in everything we do based on institutions, their funds that are available, government regulations, and moving the world more sustainable. And having that solid knowledge base is going to absolutely be key for not only a way to bring the investment community more in sustainability, but also to allow individuals to increase their career opportunities and increase their firm's ability to promote ESG investing. On the certificate itself is qualification, as it says, created for practitioners by practitioners. In other words, it's been developed by those that are working on ESG investing, ESG experts, and those firms' contributions that have sustainability as part of their investment mantra. The important thing is, just like the CFA charter and other programs, it is a self-paced study. It's a, you get the material, you study, you read, and the recommended study is 130 hours on average, depending on your ability and knowledge. This one, unlike the CFA charter, as many of you know, does not have formal entry requirements, but as we say, the investment knowledge is helpful. And that's because a lot of the concepts that go into this program talk about how to take the ESG concepts and apply them not only to individual investments, but also into the portfolio management function as a whole. So having that background and knowledge on how investing and finance work will help with this program. But also, as we will see shortly, this is not aimed necessarily at those type of investment professionals that have been in portfolio management or analyst type roles for years. It is more to look on ESG as the main focus and how to integrate that into investments generally. One thing that we're very proud of, as you see on the second column, is that it is endorsed by the UN PRI, which more and more firms are signing up to. So it's something we are very pleased that we are in cooperation with. The certificate and the exam, it's a one-time exam. It's roughly 2+ hours to take the exam, or at least that's what's scheduled. It's 100 questions and they are multiple choice with some item sets. There are no written essay type exams. It is all multiple choice. And the advantage with that as well is this testing can be done at the test center or actually at your own home if you have the ability and you have the Wi-Fi capabilities to be able to do that. You can do it from your home, your own office, etc. So it really expands the ability for the amount of people to be able to take it. You don't have to go to a large test center at a certain specific time. The dates that you can take the time, the dates and the time are very open and very bespoke around your needs. The current, as you can see on the right-hand column, over 10,000 registrations since the UK launch. And in fact, this year alone, since the CFA Institute has taken over in October 1, we are above approximately 3,500 people that have signed up just since then because of the global rollout. So it's something we're very proud of, and we're very proud the fact that countries and agencies all around the world are taking this on and promoting this. Because again, one thing we need to do is have a global common language around ESG issues and knowledge. If we can go to the next slide, please. This is something I want to spend a little bit more time on and really differentiate a bit from some of the other charters and certifications. The certificate is designed not just for portfolio managers, fund managers, and analysts, but because of its broader nature and because of the broad reach that ESG has in the financial and investment community, this is designed to help that education level for a lot broader swathe of staff and employees. So sales and distribution teams, relationship management, any of those folks that are going to have ESG conversations with underlying investors or influential bodies, again, to be able to speak the same language. Product development teams for those that are going to help incorporate clients' ESG needs into funds or investment products. Wealth management trustees. So any of these type of employees that are going to touch ESG in the investments scenario in one way or another. But equally, this is appropriate for those, say, that are in legal and compliance or other type of roles that need to have that knowledge of what ESG means, especially around that regulatory aspect and regulatory front when it comes to ESG investing. We can go to the next slide, please. This one is actually something, again, we're very, very proud of. Since especially we have taken this over, there are many global firms that are adopting the CFA, the certificate in ESG investing, by not only having it as part of their educational program, but many of the firms we are currently speaking with are going to be requiring this for multiple roles within their investment firms. And not only that, because of the depth of this program that it goes into, and the fact that, say, the UNPRI supports it, and that they want to have this global understanding of ESG, a lot of firms are actively promoting and mentioning in their own marketing efforts that they are strong supporters of the ESG community and ESG efforts. If you want to expand slightly on this slide, go forward slightly, you'll see some of the names of the firms globally that have come out and actively supported this program. And these are just a few select. You can see some of the global and international names that have come out publicly and supported this ESG certificate as part of their own education. And something this list is, and it's something we're very, very proud of. In fact, we have a lot of firms that are really eager to help us with public support and make it known that they are actively supporting this program. If we want to advance one more slide, please. Sorry, yeah, there's a few other names, they keep coming, which is a good thing. So if we go to the next slide. So very briefly, in the couple of minutes that I have left, I just want to go briefly into what does this syllabus cover of the ESG certificate. In the start, the first 2 or 3 to 4 chapters are introduction to ESG as an investment concept. What does it mean? And then goes into chapter 2, 3, and 4 are the individual E, S, and G. Apologies, chapter 3, 4, and 5 goes into the individual factors, the E, S, and G, not only what goes into those factors when it comes to investing, but also the challenges around that, especially things such as the social and governance factors in particular, adding a little bit more challenges into how to incorporate these factors into an investment profile. Chapter 6 goes into engagement on engagement and stewardship, which is a little bit more taking governance into active play. And then 7, 8, 9 really are the meat of the program, really taking these concepts and factors and putting it into investment analysis, portfolio analysis, how to construct it, how to incorporate it, and especially taking into account the various regulatory and government requirements around ESG investing, how to report, how to demonstrate that you are ESG compliant. One of the things that is mentioned also in this that you may have seen is that the ESG codes and standards have recently been released by the CFA Institute, and those are increasingly tying in, but also the importance of having this knowledge for those firms and agencies that are going to be adopting the new ESG code. So this is the syllabus as a whole and the general level of what you're going to be studying and reviewing for this. Can we go to the next slide, please? Really, and I will summarize and end with this slide. Why should somebody choose the certificate in ESG? One of the important things is that it is a CFA Institute program, and what that means is it has the level and knowledge, the high standards of knowledge that the CFA Institute brings, but also the global view, taking into account multiple regions and how ESG can be incorporated in the investment profile, but also global regulatory and government relations, which are becoming increasingly important when it comes to ESG investing. And really, as we see, number 2 is talking about that we have a common benchmark and common knowledge around ESG and the skills required. And this is a key thing for us because as ESG grows in importance and momentum, we do need to be speaking the same language, understand comparative investment products, comparative investment services, and make sure we are all moving forward in the same ESG concepts together. So I think I'm out of time at this point, so I will leave it at that. But please, if anybody is interested or has any questions, you're more than welcome to contact the CFA Society of Nigeria, or here's my contact details individually. We are very happy to help guide you through the program and aid in any way we can. Thank you very much. I appreciate very much the time and being able to present, and thank you to the CFA Society of Nigeria.
Thank you so much, Klaus, for that concise presentation around ESG certification that is designed to build capacity in Nigeria as well in the African markets and globally too. At this point, we are rounding up, we are beginning to round off the conference. I would like at this point to invite the Vice President of CFA Society Nigeria, Chuka Maduabum, to round off the conference properly by thanking all the participants that have stayed with us from the beginning of the conference this morning till now. Over to you, Chuka.
Yes, thank you, Yemi. Thanks for that brief introduction. I would say that I found this session really engaging and insightful. And this is the first of many that we'll be having on this subject matter. And, you know, we will subsequently be engaging the relevant stakeholders on specific action points that need to be executed. And further to Klaus' presentation, you know, would urge everyone in the investment management industry to enroll for the certificate in ESG Investing program. And would also be sharing contact details in the chat box. So the other thing I would say is that, you know, I'm impressed with the turnaround, the turnout and the participation in these events, because I mean, there are other very important events happening this week. So the COP26, the Super Return, among others. So we're really grateful for everyone that has shown up. One more thing I would like to note is that this session is being recorded. So for those that didn't, you know, stay true to the end, you know, they'll have the opportunity to look at everything at their spare time. So the link will be sent to everyone who registered for the event. If another point to note is a few upcoming events that we're organizing this month. One of them is the career fair that is taking place next week Thursday and Friday. So that's 11th and 12th of November. The asset manager code that's the asset manager code workshop for the regulators as well as operators. That will also be taking place in this month on the 15th and 18th of November, respectively. Then there is also a session regarding mental health, you know, just to ensure that, you know, we professionals have that stability to be able to deliver for, you know, to our clients. So that will be taking place on the 20th of November. On behalf of the board of the CFA Society of Nigeria, and in no particular order of importance, I would like to thank the guest speakers, Okey Enelamah, the former Minister for Trade, Industries and Investments, you know, for answering our call. He's been very supportive. And in a similar vein too, I would like to thank Lamido Yuguda, the DG of SEC, Mrs. Aisha Ahmed, the Deputy CBN Governor. We'd like to thank them for, you know, sharing their insights and for supporting us. And we hope that, you know, they would answer our call when we request the assistance. We're also impressed with Mark Franklin, the president of the CFA Institute. She graced our occasion, and for the first time, she addressed the African community. And this buttresses her belief in the impact that young African professionals will have in the global investment ecosystem. I would like to thank other CFA societies in Africa that have supported this endeavor. So specifically, CFA Society Ghana, Mauritius, as well as East Africa. as well as other professional bodies such as the Association of Certified Chartered Accountants and FMAN. They've supported this event. They've been successful. They've supported the success to this event. Our panelists and moderators, we want to thank you. You've been magnanimous in sparing your time, as well as sharing your knowledge on ESG and sustainability matters. The participants, we also want to thank you for showing up, for turning up. You're the reason we've actually organized this event. Then finally, I'd like to give a vote of thanks to the silent workers at the Society office, led by Yemi Ajagun. They have been tenacious in executing every aspect of this program, and I've been honored to be with them at the back room, seeing everything that is going on. You guys have done a great job. At this stage, I would like to wish everyone a blessed week ahead and a successful close to this year as we advance towards Christmas. And do enjoy your virtual lunch. Thank you.
We are professionals. We are impact driven. We are CFA Society Nigeria, a member society of the CFA Institute Global Network of Societies. Our mission is to promote the highest standard of practice in the Nigerian financial services industry and provide a vibrant community for our members. The CFA Charter signals the holders' commitment to professional excellence. As thought leaders, we collaborate with stakeholders to ensure adherence to ethical standards, better education for professionals, and to build market integrity. We are the leading voice for advocacy in the finance and investment industry in Nigeria. To partner with us or become our member, visit us at cfasocietyng.org for more details. CFA Society Nigeria, making finance a force for good.